All right, looking good. Should be live any minute. Let's go ahead and get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, March 30th, 2022, Eastern Standard Time. And before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, looking good. Let's go ahead and get this party started. Obviously, try to keep you guys up to date with everything that is happening. I do want to bring to people's attention once again that we are wrapping up the first quarter. And as we come to the end of the month, obviously the end of the quarter is a substantial time where most institutional and, corporation, etc., investors are going to, rebalance their portfolios. So going to be taking profits in some things that have went really high really fast, and also just reevaluating their current positions. So typically we will see quite a bit of volatility around that time, based on those moves. So think about rebalancing as something that's done to be responsible, but also sometimes moves are made out of necessity. So a lot of times if something has ran quite a bit, like for instance, tech stock or crypto or something like that, regardless of if you are still bullish on that long term or medium term, once it reaches a certain percentage allocation in your portfolio, in order to maintain balance, regardless of how bullish you are, you will oftentimes sell into the recent price action and then rebalance into some things that are undervalued or that you're underweight in. So sometimes you'll be overweight in something because you're bullish on it. Sometimes you'll be underweight on something, because you're bearish on it. But typically we'll still have some sort of exposure to that asset class, etc. But the truth is, a lot of times if you become overexposed as we come towards that, quarter rebalancing or half or end of year, etc., we will see like reversals or big moves in counter trend directions. I have been talking about already how I thought a lot of this move was basically a bear market rally, a nice bounce, obviously. I think quite a bit of this has to do with coming to the end of the first quarter. Think about it from a hedge fund or family office perspective. You get ready for the first quarter to wrap up. You're getting ready to, prepare a investment letter or summary, synopsis, whatever, for your clients, etc. How does it look if you're down, 15% across the board in your index positions? How does it look if you're down, 12% in your bond portfolio? Obviously it looks bad. So, without getting into like big conspiracy theories or anything, a lot of times towards the end of a quarter, you'll see a lot of institutional investors pour extra money, clients' money, liquidity, leverage, use options, whatever the case may be, to move the price back up to close in a more favorable position. Because obviously, if you are investing with someone else's money, it looks pretty bad if you have a quarter where you're down 8, 10, 12, 20%. So a lot of times we will see these moves, some of them will line up with options. Some of them will line up with key fib levels and bear market rallies, 200 moving averages, etc. But keep in mind, it's okay to get bullish when things start looking bullish again. This is obviously not financial advice. You should do whatever works best for you. But just keep in mind that there are some, key factors here that some people are not taking into account. Nothing has changed on the fundamental levels. Everything still looks the same with Russia, Ukraine. Everything still looks the same with the Fed, with the yield curve inversion, all but inverting, about to invert, whatever. Does not mean that there's impending doom tomorrow, that all of a sudden everything is just going to crash down. But as we come to the end of a month, as we come to the end of a quarter, and we see these things culminating, those are typically what turns into like a reversal point. Now, it doesn't have to reverse. We could easily just continue up to the upside. But if you look at, historically speaking, when did this, bear market or sell off or aggressive downturn start happening? was right around the end of the year as people were taking profits, locking in gains, etc. So now here we are 1 quarter later, and now we've had a pretty solid sell-off for the last couple months. And then the last few weeks, we had a nice little bounce off of those lows as people were taking profits on their short position, rebuying at lower prices for some of the assets that they were bullish on. So it's not unrealistic to think that we may see some of those positions now get reversed once again, or have those positions, closed out. If you were super bullish after the sell-off and you bought back in and then you just made a nice little 10, 12, 15, 20% gains, it's not unrealistic to think that you would take those profits, lock them in for your, shareholders or for your clients or for your own portfolio, and then reevaluate. So that is what I'm anticipating. That is what I am personally doing. And I think it's important for people to keep this type of thing in mind, not only what you're doing as a person. If your whole portfolio is in crypto or metals or stocks or, whatever it is, Pokemon cards, it doesn't matter. My point being that other people, other market participants may be doing something different. So it is important to keep in mind what those market participants may be doing. So, I know people want to get bullish again. They see Michael Saylor all in on Bitcoin again. He just took out a $200 million loan to buy Bitcoin. I mean, sure, this guy is literally just somebody who is nonstop, going to have to pump his books. I mean, he's got, he's basically got billions of dollars in cryptocurrency. So, or a billion or whatever it is. So at this point in time, he has a vested interest in nonstop pumping up a, you can call it whatever you want, pyramid scheme, Ponzi scheme, investable asset, the future of money, the future of wealth, the store of value, whatever it is, he has a vested interest in it. And obviously because of crypto's lack of regulation and what's taken place over the last couple of years, with starring Elon Musk on Twitter, Michael Saylor is basically just doing the same thing. We saw Dave Portnoy do it, where you're essentially like borderline doing illegal things. Now, technically, it's not illegal if you disclose what your investments are and then go out and just buy more stuff and let people know when you're buying stuff and pump them up. But I mean, without a doubt, what you're doing is essentially pumping your books. You're basically just, I mean, it is what it is. Obviously there's no regulation. Nobody gives a damn about anything anymore. So it is what it is. But the fact of the matter is, when we see these big moves to the upside, the idea is to get people to FOMO or to squeeze people out of shorts, or make it so that they have to join into the momentum or come into a rally already so far off of the lows that, it puts them in a compromising position. I mean, if you bought into a position 15% ago or 20% ago on something, you're in a much safer, more comfortable position than somebody who's FOMOing in now when we're at resistance. And I think it's important to remember that we've been talking about these levels on Bitcoin. We've been talking about these levels on, S&P, Dow Jones, the NASDAQ, the Russell. We'll go into those. We've been talking about, TNX. We've been talking about these levels for months. Now we have reached those levels, and I can feel people, I can hear people, people are expressing to me that they are like all of a sudden now feeling the FOMO, getting bullish, etc. Now is not the time, in my opinion. There's two things that could be done. You either just sit on your hands and wait for further confirmation or continuation, or, you just sit this one out, completely. Or, last thing you want to do is buy into resistance or sell into support. I was saying that when Bitcoin was hitting the lows and people were wanting to open up shorts down there. I said, I don't think it's a good idea to short into support when we could easily run 20+% back to the upside. And, we're taking long positions as other people are thinking about entering shorts or taking shorts. And then vice versa now, now we've reached all these resistance levels and people want to FOMO into these various like stocks and cryptos and everything. And it's like, now we're at resistance. Now is the worst time. You got to break that mentality of wanting to buy at resistance and sell at support. You have to think the opposite. I don't want to always be like, counterintuitive or like, contrarian or whatever. But I mean, let's be real. There's a reason that market makers and psychology of trading and everything is so important and takes advantage of the way that they're able to manipulate people's, thought process. So when we see something break down from a key level, how often does it break and then see continuation or break out? And then how often does it break down, look like it's about to lose support, and it has clearly broken support, and then all of a sudden that's the spring that shoots it up higher? or vice versa. It breaks out to the upside, looks like it's about to get massive continuation, breaking out of a consolidation pattern, and then we get a throw over and it capitulates down to the bottom. I think that happens at least 50% of the time, maybe more, maybe slightly less, but it's enough that, you know, I don't like taking breakout and breakdown trades without a retest, confirmation, and then look for continuation in that direction. So we have TNX here. We're going to get started with that one. If somebody in the chat, just let me know that we're coming through loud and clear. So obviously, you know, we've been looking at this chart. Hey, what's up, brother? Good to see you. Triple dumps in the house. Oh, God, I love that. Fucking awesome. So we have reached the 0.5 of the red macro fib. We also reached the 886 in yellow of the fib. So what's going on right here? Is this an area that we want to get bullish on yields, or is this an area we want to get at least temporarily bearish on yields? I mean, I would say bearish. We have reached the resistance. We got there. This was our target. We were down here, and our target was the 200 exponential and simple moving average. So we have literally, rocketed to the upside, 267%. Now is when we're like, okay, we're probably going to have a pullback. We're probably due for a sell-off. We're probably going to see yields come back down. Even though I'm still macro bullish on this chart, on the monthly and everything, right now we're at resistance. So this is the last time you want to be getting like super bearish on bonds or super bullish on yields. And if we look back here, this Fibonacci is from 1981. So we went from 1981 to 2020, almost a 40-year pattern. And then when we look back at it, we look at these levels, obviously we see very clear, in hindsight now, we know this was the bottom, that was the previous top. So when we draw this fib and we look back at it, we come back, circle around, Jen Psaki style, where were we at? The 886 was clearly support back here. The 786 was clearly support and resistance back here. We see clear interactions along here at the 618. We see clear interactions right here at the 0.5. We see clear interactions at the 382. I mean, I don't have to spell this out for you guys because you already know. But now here we are. We have broken out of that key resistance and moved up to the next fib. So here we are. We tagged the fib, literally to the dollar, to the penny, to the percent interest rate. I mean, we hit it. We did it. We hit the target. We made it to the top. Congratulations. Now what do? Well, in my opinion, we sit back and relax for a minute, because this is the move we've been expecting, and now the move is over. Now, it doesn't mean it can't see continuation or breakout of that range, but let's keep in mind, this is a 40-year downtrend. This is a 40-year pattern that we're looking at right here. So if we're going to break out this 40-year pattern, it's going to be a massive move, and the world's going to change. But how many times did we not break out of that pattern? Every other time. We didn't break out to the downside. We didn't break out to the upside. For 40 years, we operated inside this descending range. So the likelihood of this being the time of just right now, just skyrocketing through this and bursting to the upside, and this being our big breakout, is very, very low. Now, do I think that it's going to happen? I think it will. I think we're getting ready to break out of that trend. But we're not just going to do it all of a sudden in a single day after just touching resistance for the first time. We're not just going to all of a sudden, break out and go parabolic, and it's like, oh man, we missed it. I mean, this is going to be an entire change in the way that the world functions, in the way that the, bond market functions. So patience is key right here. But the last thing we want to do is be buying, bonds or getting bullish on rates into the 200 exponential and simple after a 267% move to the upside or whatever. In my opinion, it's just not the time to do it. So, I mean, looking at where we're at right now, we're at resistance, in my opinion. Putting on the drawing tools right here, and it's tough to see on the monthly, but obviously we have this descending channel, and we have hit the top and the bottom of the channel. I mean, countless times. Well, not literally countless, but enough that I don't need to count them for you right now, for you to clearly see how many times we have hit them. We have clear interactions with our Fibonacci levels, and we have literally just bounced up and touched the first Fibonacci level. So considering that we have just hit the first, well, it's set for log scale, obviously, so it's not actually the first Fibonacci level, but when we were looking at it right there, it was. But now that we have made our way up basically all the way and tagged, the 0.5 literally to the penny right here. And this, I mean, how long ago did we put this red box in place? This has been in place for months. We have been expecting this move, this target, this breakout to the upside for literally months. So now we're here. Now is not the time, in my opinion, to get bearish on bonds. Now, should you get super bullish on bonds and go all in? Is now the best time to buy bonds? No, I'm not saying that either. But I definitely don't think now is the time to get bearish. You had all this time to get bearish on bonds or bullish on yields. I don't think now is the time to do it. We're at resistance. We're at resistance. I mean, you guys know this, but I just got to reiterate this stuff because sometimes I think people just forget. And this is obviously the 886 and the 0.5. So this is confluence of our two fib levels in literally the exact same spot. We're at the yellow fib. We're at the red fib. Nowhere else on any of these fibs do we see the yellow and the red lining up together. These two are pretty close together. These two are kind of close together. These two are literally in the same spot. So for me, we have both fibs, the macro fib, and then we have just from the top right here in 2018, both to the bottom right here. So we have a 40-year fib, and then we have a whatever 2-year fib right there, a macro and a micro fib. And then both those levels just so happen to line up with our monthly 200 exponential moving average and the target that we've had on this chart for literally months. In my opinion, this is the strongest area of resistance we have ever faced, ever. So the last thing I want to do right now is say, okay, I'm going to fight this resistance and just assume this is going to be the big breakout of the trend. Now, what probably happens? We probably, in my opinion, we probably come back down here, consolidate for a little bit, build up strength, get what I like to refer to as a bullish reset, and then we can go higher, if that's the case. Now, how do we know if that's happening? What would make me start thinking, okay, this looks like super bullish, like we're about to break out? Well, if we just chop around here for a while these indicator and oscillators just roll back over and start looking bearish, but price action, or in this case, bond treasury yield just goes sideways. And then this just cools back off and comes back down to normal levels, and the chart just goes sideways. That's what I call a bullish reset. It's basically just cooling off the indicator oscillators before we can continue the move to the upside. So what would invalidate that? Well, if we start breaking down below the 200 exponential and simple, we start, violating key levels, whether it's like the previous Fibonacci level, it could be either the 786 in yellow or the 382 in red. I would expect basically a bounce back here, consolidation, kind of tap the roof, a bounce back here, maybe even a lower low all the way down here to the 382, bounce around. That was our breakout level of the cup and handle. Oftentimes we break out, come back down, retest it, don't even get back down to it, see continuation. So I would start thinking, okay, this doesn't look great if we start coming down here and taking out that previous low. We start putting in highs and then potentially lower lows. And then it starts looking like, okay, this might start going into a bear trend. But right now, this looks like it's just going to cool off for a little while. Still very bullish on it. We looked at the monthly. We looked at the daily. Let's look at the weekly now. Weekly is literally confirming into a bull market for the first time since basically before the Rona dump, March of 2019. We know what that was, obviously. So here we're back on top of 200 exponential. It's bullish. We're back on top of 200 simple. It's literally flat, about to flip bullish. So it's not unrealistic to think this comes back down, cools back off, this flips over blue, and then that's the start of, a multi-year bull market in treasury yields. And then that would correspond with basically, bumping our head on resistance, and then a breakout on like the monthly time frame. Or in this case, we've been breaking out on the daily, obviously. So that's what I'm seeing. Again, we're seeing this at extremely high levels, bullish control zone, looking like it wants to kind of cool off right here. We're seeing some short-term, mixed signals, but, some bearish divergence depending on where we're looking at the Stochs or, what we're looking at basically. It's not clear confluence between some of these things, but the scope and the aggression of this move, the momentum that it has built up tells me that, this time could quote unquote be different. So now if we look over here at TLT, let's look at the TLT chart. So what have we been paying attention to on TLT? Well, I mean, we talked about how this is basically potential. When we were way back here in this level, we were talking about the TLT coming up and hitting the 0.5 and then putting in a potential head and shoulders pattern. And we've had that drawn forever. And then it literally started filling that out, but didn't quite make it to the 0.5. Then it chopped around sideways. And I said multiple times, this potentially could invalidate the head and shoulders because I like to see symmetry between the patterns. And then we chopped around for a little bit, came up, finally tagged the 0.5, And then since we tagged that 0.5, since the bots, since the algos, since the market makers got their nut, hit that 0.5, what has happened? We've just been melting down. And we have this descending channel. And now here we are. We've had this identified area of support below the breakdown, which was basically just our, ascending parabolic support line coming up here. And now that's where we're at. Now we slightly broke down below it, and it's like, oh, we broke support. That's it. We're just going to melt down. And it's like, well, is it? Or is this just, is this just the spring? Is this just a push down? It looks like we violated support. And then all of a sudden people are trapped upside down in a trade thinking they're going to get that continuation, when in fact we're about to reverse, at least for the short term. And of course, that's exactly what's happening. So, to draw these targets out ahead of time and then for them to get hit so clearly months and months and months later tells me that these charts are trading very, very technically. And I'm not the only one doing this. There's lots of other people, market makers, market movers, whales, bots, algorithms, family offices, hedge funds that are literally doing the exact same thing I'm doing. And that's how we know we're doing it right, is we're seeing the exact interactions on the chart that line up with what we're doing. And that's the best case scenario, is to see the chart corresponding, responding exactly where we anticipate it, because that's the point of technical analysis. So this is beautiful. It's working excellent. We just want this to keep working. So right now it looks like TLT, it looks like bonds are going to try to rally. Now, where do they rally back to? Do they break up here? Do they go here? Do they come all the way to the top of the range? We don't know. But we know they're in a bear market on the daily. We know they're starting to look a little sketchy, on the weekly. I mean, look at this. We broke down now below the 200 exponential and simple. 200 exponential already rolled over. 200 simple is almost flat. So do we come all the way back up? Do we just come up back to like the key resistance? I would say right now a pretty safe target is 136. So now all that money that's been coming out of bonds flowed into stocks. Stocks pumped up off their lows. I think a lot of that money comes back out of stocks now with the rebalancing and then flows back into bonds, at least short term. So we'll see what happens. There's still a lot of momentum. We're definitely inside the bearish control zone, but it looks like now that we're at support and it's time for us to get at least a little bit of a bounce. Now, it doesn't change my long-term perspective. This still looks terrible. The 8 and 21 across the downside is accelerating. This is a big red candle, probably one of the worst sell-offs we've seen in bonds. I mean, I heard some crazy numbers. I don't know if they're true, but I mean, this is 09. We went parabolic and then we had a complete meltdown, right afterwards. Other than that, I mean, we have one back here in 2003. So this is not, we don't normally get these nasty, just meltdown candles like this. We basically have one in 03 after a parabolic move, one in 09 after a parabolic move, and then we see one right here in 2016 after a parabolic move. And then obviously we had a parabolic move, had a little something here, came back up, and now we're seeing another meltdown. So we'll see what happens. This closes in less than, 24 hours. We got 1 day left till these markets close. I mean, I'm going to tell you right now, if this does anything but come all the way back up to 135.35 before tomorrow's close, it's going to look extremely bad, because this is our support level very clearly based on horizontals. I mean, there's, anyone can look at this and say there's something here, and we broke down from it. So if this gets bought back up and we close right at 135.52, it's probably going to look like we get a nice bounce back to the upside and try to reverse this downtrend in bonds. Now, does it happen? I mean, I don't know. We have to wait and see, honestly. I would say probably no. I would say we probably go lower. But if that happens tomorrow, I'll say, okay, this is definitely not the time to be bullish, on yields or bearish on bonds. People always say it's priced in, don't fight the Fed. And then all of a sudden it's like, oh, well, now we're going to fight the Fed because it doesn't fit our narrative. Oh, now it might be priced in, but the market's dumb. It's inefficient. Well, it's one or the other. It's either priced in or it's not. We either don't fight the Fed or we do. But we have to be consistent. That's the most important thing. So what I'm seeing right here is I'm waiting to see what happens with this close tomorrow. It's going to be a massive deal. If we close below this, I think we come down to 200 exponential and simple. Maybe not just in one candle. Maybe we close down here and now we have a high, then we have a low, then we have a lower high, then we have a lower low, and then we come back up and put in another lower high. Does not mean we can't just come back up here to 145, 150, etc. But what it does mean is that we'll be confirming a new low. So that is the key. We have a low right here. If we close below that low on the monthly, this chart looks very bad. If we hold that low, the chart looks better. Still not great, but at least we have a 50% wick on this candle and we reclaim support on the monthly. So that's, and you know, the reason we always talk about yields and bonds being so important is the size of the bond market is massive. It's massive in comparison to the stock market. The stock market or gold or Bitcoin, they're all just little guppies. And the bond market is the whale. You know, it's the aircraft carrier in the middle of the ocean with the little jet boats and the sailboats and everybody else is doing their thing. The bond market is the aircraft carrier. So whatever it does, whenever it pivots, whenever it moves, whenever it changes direction or slows down or speeds up, it happens very slowly. But the momentum behind those moves and the strength of those moves is enough to literally, you know, change the way the ocean is reacting. So all these little boats and everything are moving around doing their thing. But if the aircraft carrier decides we're going to change direction, the boats have to get out of the way because the aircraft carrier don't give a fuck. So that's what matters. What the bond market does is what matters. So the bond market has been the most bearish it's been in arguably 5 years, 10 years, 20 years, 30 years, I've heard people say, depending on what metric you're using. It's been extremely bearish. I mean, imagine if your safe bet was the bond market. And, you know, granted, we had a pretty aggressive run up right here, but just remember, this, look back here. I mean, if you were invested in 20-year bonds in 2012, 10 years goes by. Now it's magically 2022. It's in the future, aka the present. And what has happened with your principal on your bond? It's right back where you've been. So your safe bet is right back where it's been. Well, what if you invested, you know, after that? What if you invested on one of these peaks? What if you invested in bonds because you got scared anyway, anytime in July, and you bought into this parabolic breakout, this aggressive move? What if you bought in right here? What if you bought in right here? I mean, if you look at the percentages that these bonds are down, I mean, just imagine being down 12, 15, you know, 25% on your principal on your safe bet. I mean, you're literally, you know, at 2.5% interest. If you're down 25%, that's 10 years worth of yields gone. That's 10 years investing gone. And if you're in bonds, let's be honest right now, you're probably old. You're probably not a spring chicken. I don't know a lot of young people. I don't know a lot of people, millennials or younger or, you know, whatever, that are investing in bonds. And if they are, they have a tiny little fraction. We're not talking about some 60-40 portfolio. We're not even talking about 80-20 portfolio. We're talking about probably some bond that they got, you know, from their parents 30 years ago that they just never cashed in. I mean, very important that we keep this all in perspective and focus on what's really happening here. So that being said, let's take a look at the VIX now. So we had the VIX on the daily, obviously broke down from a key level. Our ascending support line broke down from the area we were watching here in green, below the 200 exponential and simple. We saw it push back up, and now we see, you know, an indecision candle. We're down in the bearish control zone. Normally this means obviously the bears are in control. They're obviously like strong. The bulls are nowhere to be found. But sometimes also this can represent complacency. So what we're paying attention to is the level it's at right here. So we're down at 1.86. You know, it's not like we just entered at 20. We're not at, you know, 18 or 17 or 15 or 10 or 5. I mean, we're literally down at the bottom of the range. So when we look at, you know, going back here, you know, I mean, at this point in time, we're looking back at like 2016 on the daily. This is literally the lowest we have been. This is the most complacent the market has been, the least amount of volatility we have seen in the market. And think about what has happened in that amount of time. You know, think about all the moves that we've seen happen. Think about all the just craziness we've seen in the markets. And now we're at the lowest level of volatility right now. So there's potential war breaking out and, you know, potential of World War III or nuclear war. There's, you know, economies completely melting down, potential of food shortages that could starve, kill, you know, inconvenience hundreds of millions of people. You know, we're seeing commodity prices go through the roof. We're seeing, you know, valuations at extreme high levels, houses becoming completely unaffordable for new homeowners. We're seeing all these crazy things happening right now. And the S&P is at the lowest level of volatility we've seen in literally years. So does that seem like a red flag? Does that seem like complacency? Does that seem like, you know, maybe after this just complete meltdown that it's probably not the time to get bearish on volatility? I mean, in my opinion, now is not the time to get bearish on volatility. I mean, this is a complete meltdown. in volatility, which tells you people are just completely complacent in these markets right now. And they're just full on, this is it. We're going back into the bull market. Time for new highs. Let's go crypto. Let's go stocks. Let's go everything. We're buying the dip, bro. You know, we're up. Let's go momentum. Let's go meme stocks. I mean, to me, that's a big like top indicator for markets or bottom indicator for volatility. So can volatility go lower? For sure. Could we break out to new highs on stocks? For sure. Anything is possible. But this to me, massive, massive warning sign. Huge red flag. What's going on right now? The level of volatility on the daily being so low to me is like, I don't know. You know, obviously that is a pretty big bearish candle, but we see typically, you know, with volatility, we usually get a big green one, a big red one, big green one, big red one. You know, it kind of bounces back and forth, you know, on the monthly. So if this is about to be the end of the month, and we typically see, you know, sometimes we'll see a couple reds in a row, sometimes we'll see a couple greens in a row, but, you know, a lot of times we'll see, you know, green, red, green, red, green, green, red. So, you know, is it going to be red again? Sure, maybe. Is it going to be green this time and another big green one? I mean, maybe. Maybe. I know I don't want to be on the wrong side of the volatility trade or, you know, this setup right now that's taking place. And I think a lot of people are about to get caught with their pants down on this one. So U.S. oil, you know, and keep in mind, we basically nailed the exact top of the market at the end of the year on crypto, on stocks, on everything. You know, we essentially got the bottom of the market, perfect targets, hit, and now we're bouncing back up. We got a bear market rally, a dead cat bounce. You know, we always talk about it. Stairs up, elevator down in a bull market. Stairs down, elevator up in a bear market. Does it feel like we've been on an elevator, or does it feel like we're just slowly grinding upstairs? Feels like we're on the elevator right now to the upside in a bear market. That's what it feels like to me. So when we look at oil, obviously we have the 8 and 21 come back down, look like they're getting ready to cross the downside. We're forming this little triangle or resistance level right here. We were not able to maintain that key Fibonacci level. We have another support here in green. We have our ascending support that was resistance here in red. We obviously broke out from it, came down. What did I say? I expect us to come back to the upside, and we're looking for a lower high. We're looking for a lower high telling us is a potential topping pattern. If we break down from this, you know, then we're obviously looking for a violation of key levels, including that previous support level at 94.73. If we break down below, you know, 100 was the key level we were watching. We went down below it. We pulled back up to it. If we break down from there, we obviously have the green support. But realistically, a close on the daily below 94.73, again, we have a high, we have a low, we have a lower high, then we would have a lower low, and it would imply continuation, at which point in time we would look at 83, and that is a potential target actually for accumulation, you know, for continued upside momentum. And then once again, we spoke about this. This happens all the time, not 100% of the time, but, you know, we're in a bull market, a bull trend. We have blue slope line. We break down from it. We move back up to it. We get rejected, and then it flips over red, and then we see continuation to the downside. Doesn't always happen like that. Sometimes it breaks through it. Sometimes it doesn't make it to it. But we see more often than not with the settings that I use and provide that we see this happening. So that's what I'm paying attention to. We'll see what happens. So, but oil definitely looking like it's cooling down for a little bit. And obviously we know what kind of effects that has. We know the energy spike and all that, and how that, you know, reflects on the overall markets and, you know, the economy and cycles, etc. So is this the end of a secular bull market and a cyclical bull market at the same time? Maybe. What's the probability? Well, it's not high. It's not high because some of these things last for 40 years, 80 years, 90 years, whatever. Some of them last for 10 years. Some of them last for 2 years. I mean, but it's not high, but, you know, there's sure a lot of things lining up. So here we see on the Dow Jones, you know, we were watching this level. We came back up. We tagged our level. We made it to the red zone. We made it to 200 exponential and simple. We made it to the, you know, what was support acting as resistance. And now what did we do? We poked above it a little bit. We're starting to look okay. But, you know, we're at the top of the range. We're at the bullish control zone. We're at the top of it. So it's like, well, the bulls are in control, right? So we go higher. Maybe, but we also need a bullish reset. We need to cool back down so we can go higher. You know, alternatively, what are we looking at? Well, we're probably looking at bearish divergence. We have here a high, then we have here a much higher high, much higher high. Let's look right here. We have here a high or here a high, and then here a much higher high, okay? So then, sorry, I'm going to point to the wrong thing. I meant to point to this. Is that what I pointed to? Yeah, right here. So here we have the high, and that was this high. And then here we have a much, much higher high on the histogram. And, it's lower still. So, could we invalidate this and just move up above it? And then we're at new levels and it's like, oh, we're breaking out, whatever. Sure. And then we'll pay attention to this high right here and see, well, this is already higher than this high right here. It's already higher than that last peak right there. So if this price action doesn't make it higher than the previous all-time high, it's still going to print bearish divergence. So it either prints bearish divergence here, it prints bearish divergence here, or it breaks out to a new high, and then this goes to a new high as well. And then we invalidate the bearish divergence, which is possible for sure. It's definitely possible. It's definitely possible. But at this point in time, just like we talked about with gold, do we just, calm, take profits at the key support levels? Do we just wait out the 4%, 4.4%? Do we pay the safety insurance, our quote unquote, car insurance, our Dow Jones insurance, and then wait to see if we're going to print bearish divergence, if we're going to go to all-time highs, or do we just jump right in now after a massive move to the upside? I mean, me, I'll pay the insurance. I'll pay the 4.4% to buy back in at new all-time highs, expecting continuation. But realistically, I think we probably go lower soon. I mean, we reclaim the 200 exponential and simple. We're chopping around a little bit. Let's see if it holds. S&P, much more bullish, broke out above the 200 exponential and simple, reclaiming key levels. But again, I mean, look at the levels we're at right here. We're at 95. So this either, I mean, what does it do? It cools down, it pushes up one more time, and then it rolls over, and then we can kind of reevaluate. Once again, we have to watch to see, is this going to end up printing, massive bearish divergence? Here we have a peak, that's our all-time high. Here we have a peak, much higher, but much lower on price. So in order to invalidate the bearish divergence now on the S&P, this has to break out to a new all-time high. So, are we headed up to 479? Maybe another 4% or so. Is there anything in the market right now that would tell me fundamentally or technically that all of a sudden we're going to go to new all-time highs? I mean, the Fed is not our friend. The war is still raging. Commodity prices at ridiculous levels. Economy not good. I mean, people could say it's good, but let's be real. Is the economy good or not? It's obviously not good. Gas prices are insane. So if you're using oil or energy or anything to make or transport products, your costs are through the roof. So then what are you going to do? You're going to pass those down to the consumer. So then the consumer is going to pay more for products. Well, the consumer's balance sheet's in phenomenal. All lies. All lies. Some consumers' balance sheets are in phenomenal condition. The majority of people, the majority of consumers, most people, at least in the United States, I don't know stats for every other country, whatever, but more than 50% of people do not own their own home. So they did not benefit from the massive move up in home prices. More than 50% of people do not own stocks or crypto, or at least enough of a percentage of stocks or crypto to benefit from the most recent run-ups. Most people own almost nothing. Most people are net negative, on their net value, like their actual value as a human being. The over 50% of people in the United States, if they took everything they own and sold it off, they would still owe money somewhere or another, student loans or, some kind of credit card debt or whatever it is. So over 50% of people are net negative. That is not a strong consumer. And the ones that are benefiting right now are the ones that are higher up on the scale, either middle class, upper class altogether, etc. So the people that are telling everybody how strong the economy is and how short up the balance sheets are of the consumer and how much money they have sitting around, it's all lies. It's all lies. Or they're only looking at a certain amount of people. If Bill Gates has $1 trillion in his bank account and then everybody else has no money in their bank account, and then they say, well, when we average it out, everybody has plenty of money in their bank account. And it's like, does everybody have plenty of money? Or does Bill Gates just throw off the whole thing? So if we took out the outlier, the person that has the most money, person that has the least money, and we start using, various ways of calculating things, maybe we look at the mean, maybe we look at the median, maybe we look at the mode, and then we start looking at the different ways we can calculate the average and see if we still get these same results. Because that's the beauty of statistics is you can literally take Bill Gates, put him in a room with 10 other people and say, average out, we have a room full of like 10 of the richest people in the world. And then it's like, well, but if you take Bill Gates out of that room, what do you have? A bunch of Walmart employees that aren't worth shit. no offense to anybody, whatever, if you work at Walmart or, if you're Bill Gates, just using this as an example. But my point being is that when you look at these calculations, when you hear these statistics, make sure that what we're hearing is real. And I'd be interested to do that and, figure out some of these things with, different metrics and see really what's going on. Because I think if you really, if you're a normal human being and you really ask around, some friends, some family, some that are doing, financially better or older than you, some that are younger than you or financially not as well off. I think if you ask around and ask most people, I think more people than not will tell you that they're not financially in a great place right now. Or maybe they'll tell you they are, but they're really not. They'll give you like the Facebook front. They got new kicks on, but also they have, 9 credit cards and 8 of them are maxed out. The most important thing to pay attention to also is that the way the velocity works of M2 money supply or velocity of money or however you want to look at it, the people on the bottom of the rung spend the money the fastest and the most into the economy. So the people that don't have money, don't have savings, don't have stocks, don't have assets, houses, investments, those are the people that spend the money back into the economy. So what happened over the last couple of years was all the other people got much wealthier and better off. But all the people at the bottom of the rung, sure, they got some stimmy checks, maybe they got a couple dollar raise, whatever. But let's be real earnings have not kept up with inflation. We know that. Those people, I don't care what you say, they're like, yeah, but they got 25% more food stamps. Sure, but they're still on food stamps. So they're obviously not doing that much better. They're still using government aid programs. A lot of people haven't paid rent in years in California and can't be thrown out of their houses. You think those people are doing better? They didn't even pay rent, and they're still, you get the point. You get my point. The people at the bottom of the rung need to be doing better, substantially better, for the economy to be strong. When there's a boom, when the economy is strong and we're melting up and everything's good and it's not like completely manipulated or, nudged higher by Fed or zero rates or, stimmy checks, whatever it is, you see the aggregate of people on a whole doing better. We see record numbers of homeless people. We see tons and tons of people living in houses that they're not paying for. People have been deferring student loan debt. They have been not paying, their taxes, not paying, rents, mortgages, car payments, literally like anything you think, credit cards, whatever. And they're still just doing okay or not good. So when all those things come back in, when the end of these programs go away and then the lag period comes off, are these people going to be doing better or worse? I mean, what happens if all of a sudden, rates go up in the housing market? Okay, like we're seeing right now. We're down 60% on refis right now over year. Down 60%. And over like 2 years ago, we're down like, I think 28% or something like that. So all this money that flowed into the system through like stock and asset prices going higher is going off. All this extra money, these cash out refis that people took, at extremely low interest rates, all this extra money, it's already been pulled out. We squeezed the last drop out of the lemon and there's nothing left but the rinds now. So what is going to be the next catalyst? Is it going to be the war ending? Maybe. Is it going to be the Fed reversing policy at 25 basis points all of a sudden because the economy is not as strong as they thought? Maybe. Is the economy really just super strong and I'm wrong? Maybe. I don't know what it's going to be, but if you can't think of a legitimate reason why these markets go higher sustainably, they probably don't. It's probably the simplest answer is probably the correct one. So that's what I'm looking at when I see these charts. NASDAQ finally almost made it up to the 200 simple. We obviously got to our target. I was not ambitious on the NASDAQ for that resistance. We almost made it to 200 simple now. Technically, have averted the bear market. We're back bullish again. Everything's gravy. Again, looks like it's getting ready to roll over. Looks tired right here. A nice dead cat bounce, and then I can't remember if I pulled up a fib on any of these to see what the levels were on stream. This was our 618 level and also the 200 simple. This was our 0.5 level and also 200 exponential. So realistically, we're at a key level where we would expect a potential top, at least temporarily. Let's see what happens. End of the quarter, end of the month, bear market rally. This is the Russell. Stairs down, consolidate, elevator back up, at resistance, literally at the red box area, this one still looks like trash. It looks worse than everything else. Of course it does. It's trash. But I mean, look at this thing. I mean, barely got back up to the 200 exponential. Barely is getting rejected off the bottom of the channel. I mean, does it look more likely this thing just skyrockets to the upside now? Or does it look like it's going to have to chew through a bunch of resistance before it ever goes higher? I mean, or does it look like it just gets rejected and goes lower? I would say lower. For me, the bias to the downside. We already touched the 236. We hit it nicely. We pulled back up. We retested our breakdown as resistance. It's sure definitely acting as resistance. Maybe we chop around here for a little bit. We go higher. Maybe we get rejected here. We go lower. I would say my bias is to the downside, especially with everything happening right here. So XLE energy consolidating above resistance, holding support for now. Again, just over the levels, we were expecting it to get to. Printing some bearish divergence on the daily. Seeing that same rejection off of the slope line right here. Looks like energy's tired right here. Hard buy signal? Does that seem likely? Or does it seem like it's probably going to print, a hard sell signal right afterwards and then go lower? I mean, I don't know, but these markets don't look good technically or fundamentally to me. We're hitting a lot of the moves we expected. Some things are outperforming slightly, but is that just momentum? Is that just rebalancing? Is that just, options? Is that just, people buying up bags with their last little bits of penny, hoping that, things go higher and they're going to get out from under these negative positions or make some profits? I don't know. Is it tax money flowing into the system because people got back their refunds? I don't know. I don't know, honestly. Is it just bond money coming in and it's shot up the stock market quite a bit in our indexes and some of our other sold off stocks? I mean, probably. Transportation, back above 200 exponential and simple, halfway to the measure move. We do expect this to get up to like 96. A lot of times in a bear market rally, though, will underperform. So at what point in time do I stop calling this a bear market? And it's like, no, we're back in a bull market again. Well, I mean, technically now we're back above 200 exponential and simple. Technically, we're back in a bull market. But we also know that everybody else that's a market maker, does the same thing I do, same thing we do. So they're probably like, hey, what do we have to do to trick all the plebs, all the idiots, all the goldfish, all the guppies to get back into this market and get bullish again? Well, we'll just flip it back above 200 exponential and simple. And then, they'll be bullish again. And then we'll trap them in these positions and sell back off. I mean, cross the 821 back to the upside, and then we'll trap them in these positions, sell back off. Sure, I mean, it seems likely to me. That's what I would do if I was in charge, if I had the money to move these markets. But has anything changed? Not really to me. I mean, I'd rather be late than early on this one. I really would. I don't like how these markets look right now. Maybe I'm just being overly cautious and we just skyrocket to the moon, but I'll give up a couple percent to be sure. Because right now, these markets do not look good to me. The fundamentals and technicals do not look good to me. Look at the XLF. Hit our target, hit the red box, and now what? Well, maybe we consolidate, go higher. Maybe we go back lower. But overall, just lower highs and lower lows in the financial sector. XLC, communications, still looks like absolute trash. Haven't even been able to get back up to the key level breakdown to 236. Looks like it's ready almost to roll back over. Maybe it gets one or two little pushes higher. Couldn't even get back up to 200 exponential and simple. Communication looks absolutely terrible. What's in communication? I mean, what do we have in this? We got our Facebook / metas. We got all kinds of other just trash like that. Of course they're underperforming. They'll probably underperform for the rest of their existence. XLP. So consumer discretionary, you guys know this is, or Staples rather, is one of the places that, that I think will be strong if we do go into recession, whatever. Keep in mind that 210 inversion or almost inversion or inverted for a second, but didn't quite. That's just a letting us know that people are less likely to invest bullishly into the future. It doesn't just mean like, oh, recession tomorrow. We looked at the metrics on that, and on average, depending on how we calculated the 210 spread, when it inverted, etc., when we looked at it, it was like 3 to 18 months into the future of the recession. Now, sometimes we pump into that. Sometimes we go down into that. Sometimes we chop around into that. But the fact of the matter is that it tells us, okay, there's a recession coming. So we need to be cautious because we know what happens in a recession, multiple compression, which we've already been seeing. So now we're seeing multiple expansion again. And then we're going into earnings, closing out the quarter. So what do we probably see? Well, multiple compression again. So XLP came back up to the key levels, closed at or above those key levels. We know next target would be 76, 86. Then after that, I mean, it's clear sailing. I mean, we came back down to support. We're at resistance. Looks like this wants to go higher. Safety trade. XLU at the heart line of our macro channel right here. Still looks absolutely beautiful. You know, still have targets to the upside on this. Again, a safety trade. How many times along the way did we see this get rejected at the heart line? Rejected, rejected, finally breaks above it. Support, support, finally breaks below it. Rejected, 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 rejected again? I don't know. Safety trade, but we're at resistance. All this stuff is at resistance. Bonds are at support. Everything else is at resistance. You know, gold is at support. Everything else at resistance. Dollar on its way to support. Everything else at, you know. So do I want to be in the wrong side of a trade that's already taken place? Or do I want to wait and see how things pan out or take the, you know, opposite trade? Well, I mean, that's up to everybody. XLRE. So real estate broke up above our support line right here. Looks, or resistance line right here. Looks, you know, bullish on the short term, obviously. Trying to push back up here to the highs. You know, if rates are going to go down now for a little bit, is it realistic to think that real estate gets another pop? And people that are like, oh, I missed my chance. Now all of a sudden, rates start going back down a little bit. Fed funds rate comes back down. You know, or well, technically not Fed funds rate because it can't go anywhere. But let's say like, you know, the, you know, real estate for, or the interest rate for a house or a long-term loan or, you know, whatever else it is, a car loan, whatever you're looking at, you know, starts to come back down. Is that going to drive more demand back to that space for the people that feel like they missed out? Sure. And then we probably either put in, maybe we put in a higher high, maybe we put in a lower high. You know, we don't know. But again, long term, looking out after this little quick bounce, do we see continuation of the upside now? Or do we see resistance and potential rejection? I see resistance and potential rejection. That's what I'm looking at. But you know what? A lot of people are going to get tricked and completely wiped out here. A lot of people just sold the bottom. A lot of people are going to buy the top the same way they just bought the top. Is this the top? I don't know. But I'm telling you, people getting wrecked left and right. They may not say it. They may not act like it. They may be like, oh, look at GameStop's up 50%. Did they just buy into it? Were they in it already? Are they just regaining back to where they were before? I mean, I don't know. I don't know what people's cost average is, but Vanguard Emerging Market ETF obviously pushed back up to resistance. I expect us to continue chopping around inside this range. Nothing has changed for me on this fund. It's got China in it. You know, China had a little bounce, so obviously going to look a little bullish. DAX. So, I mean, Germany still in a real tough spot here. Back on crossing 821 back to the upside, trying to come back up to 200 exponential and simple, building momentum, bullish control zone. Are we going to go higher here? Or are we going to get rejected and go lower? I think rejected, go lower, but could go either way. China obviously got another bounce back up here. You know, retesting resistance, still has not closed. 821 back to the upside. If it does, we have a target up here at like 15,383. We're at 13,778. Doesn't look good to me though. I mean, it looks okay for a little short-term continuation, but I mean, how close are we to just reality setting back in? And it's like, oh, wait, no, things are still not good. And it's like, oh, but everything's just already priced in. And that's why the market's moving back to the upside. Is it though? Is everything priced in? Is the market efficient? Are we fighting the Fed if we try to get bullish right now? Or are we not fighting the Fed? I think we're fighting the Fed. The Fed has said, we are not your friends. We are tightening monetary policy. We are going to let the balance sheet run off. Jerome Powell said, there's a good chance that we hike basis, Fed funds rate 50 basis points. This is literally the rally we talked about in advance to the Fed meeting, saying that people want the Fed to hike rates. So if the Fed announces they're hiking rates, it's actually bullish for the market because it's like, oh, at least they're trying now. So that's what we're seeing. They're saying, we're going to let the balance sheet run off. We're going to hike rates. Matter of fact, here's 25 basis points. It's market expectations. The market expected the Fed funds rate to go up 25 basis points. The Fed to announce balance sheet runoff. That's exactly what happened. So that's bullish. Hooray, we got what we wanted. Let's go. And then it's like, oh, and then reality sets in. So for me, this is just that little temporary sugar high. You know, you're sleepy, you're tired, you're getting ready to crash out. You need to get some sleep. You've been up for, 48 hours straight. And then all of a sudden you drink a Red Bull. Sure, you feel excited for a little bit. You feel like it can go forever. And then all of a sudden the Red Bull wears off and it's like, oh, okay, reality sets in. UK 100, strong. This looks very strong. Retesting the highs right here. Back above the heart line, consolidating. Momentum. Again, this thing still looks strong. Now it's at extremely, extremely high levels. But it does look strong. I mean, it looks like it's coming back up to retest the highs. And then EWZ, Brazil, made it the majority of the way back up here. Let's see what happens when it comes back down to cool out. This is, to me, going to be a buying opportunity because I don't see a commodity bull market going anywhere. I don't see Brazil's exports like dropping. I honestly think that we'll continue to see Brazil exporting these key commodities to the rest of the world, no matter how bad things get. So I really do. I really do. So looking at those charts, are we topping out? Are we just going to run forever? Who knows? I mean, it looked pretty toppy to me. DXY. So it looked like we were potentially getting ready to break out to the upside. I've been calling for DXY to come back down. We need it to come back down. It got a lower close. That's good. We want to see this thing come back down, cool back off around like 96, somewhere around here. We really want to see that happen. We definitely printed some bearish divergence here. That's good. This is macro what needs to happen. The dollar cannot just keep going parabolic like this. It cannot do it. There's tons and tons of resistance up here. We don't want to just see this thing go spike to the upside and then just come crashing down. We want to see it come back down, recuperate. We've confirmed into a bull market on the weekly. It's very, very strong. We're at key levels. There's tons of, price action that took place at these levels. So this is very good. And then obviously when we switch over to the monthly, we see on the macro, again, this is very, very good. The monthly is getting ready to close. We're hitting resistance. We're going to chop around here for a little bit. We're very, very bullish on this long term, but these levels are unsustainable. We're at extremely high levels. Could we run up a little higher? Sure, there's still a little meat on the, meat on the bone, a little gas in the tank, but we don't want to get one of these crazy rejection candles like this. We want to just see this come back down, cool off, hit some key levels, moving averages, and then over time go stronger. I'm bullish on the dollar. I'm very bullish on the dollar. But for the world's sake, I do not want to see the dollar go parabolic. That is very, very bad for stability and functionality of the world because there is so much other country denominated debt in dollars that if all of a sudden this goes parabolic, anybody that's not earning dollars that has dollar denominated debt is going to get completely destroyed. And that is not what we want to see. That is not good for market stability. That's not good for the world. It is not good if the dollar gets super strong and the U.S. is already importing massive amount of goods, record levels of goods for our trade deficit, and then we're going into if we go into, here's a worst case scenario, okay? And, it's not going to sound like worst case scenario if you live in the United States, but if you live anywhere else, this is worst case scenario, especially if you're a third world country or something like that. Okay, all of a sudden, energy prices are through the roof all over the world. So now people are going to live and have a worse quality of life. Because energy is life, energy is sustainability, motion, it's required for people to have, a good existence or better existence. There's a direct correlation between cheap and abundant energy and the quality of life of people. So if you live in a place that's, say, a third world country or not some cozy little first world country, you're going to feel the effects of this much more than somebody else's. Sure, in the United States or England or, one of these other, European countries or whatever. Sure, I mean, it sucks. Your bill's through the roof. Your energy's double. Gas prices are double. Sure, it's terrible. It sucks. But it's not like you're not going to be able to stay warm at night. It's not like you're not going to be able to feed your family. It's not like you're not going to be able to go to work. It's not like you're not going to be able to survive. For some people, that's how it is. So when we take the energy crisis, it's like, yeah, it's terrible, it's inconvenient, it sucks. I'm not trying to downplay it at all. It definitely sucks. I get it, especially for the people at the bottom of the ladder in first world countries. But it's exponentially worse for people in third world or fifth world or whatever countries. Exponentially worse. Because they are like risk of life versus just inconvenient, and now I can't buy the new sneakers I want. So now look at food in the same way. We're going into a legitimate food crisis. We know there's going to be a food crisis. Food prices are going to go up because there's less food and there's still the same amount or more people on a regular basis. So maybe the speed of people is slowing down. The increase in population is slowing down, but there's still more people and there's going to be less food. So that means supply and demand, food prices are going to go up. So who's not going to be able to buy food? The people that are on the bottom rung of the ladder. The people who import food and can't afford to pay for it. They don't have money, the worst off people. So sure, it's going to be a lot of people in first world countries that, have to go to government aid and get handouts and get in bread lines or food stamps or sure. And that's terrible. And it's absolutely terrible. And I'm not trying to downplay those people's scenario. Okay. But the people in third world countries, in fifth world countries, like people in extreme poverty in these other countries, it's literally a threat to their life. They can't get enough calories to feed their family. That's a whole different level of suffering. And now take those two things, energy and food, and there's a limited supply of them now. And now who's going to be more likely to get more of that limited supply? The rich countries, the first world countries, can easily overpay to get a hold of those supplies. They will drive up prices through demand and supply, and then they will capture more of that. And then there's less to go around for the people that are least fortunate and can least afford it. So it causes extreme levels of poverty for the people that are legitimately in danger of, freezing to death or not being able to function, society-wise, or not being able to feed their family, poverty, etc. So that's the people that really suffer. So if we take all that, the food and the energy crisis and the supply and demand dynamics, and then on top of that, we have a strong dollar, the world reserve currency, and now all of a sudden, everybody in the United States has these dollars that are just exponentially more valuable. And now we can just buy up everything we want from everyone else at, it's like a sale. If the dollar goes up 20% compared to the other basket of currencies or other currencies around the world, it's now like a 20% discount if you're spending dollars to buy these other goods. So when we start coupling dollar strength with, food shortages and energy shortages, all of a sudden we have a extremely horrible situation for the world economy, and especially for people in third or fifth world countries. In fifth world countries, like sort of a whatever definition, if you're not familiar with that, it's essentially a third world country is people that are like lower on the rung, but over time through like exports and industrialization or whatever, they can eventually like function as an economy and grow their way out of like poverty or like lower standard of living. Like a fifth world country is a country that doesn't have like any industrialization, manufacturing, any like crops or grains or, exports or anything really. So they can't really get out of like poverty or their current situation without the help of other countries. So, when I use that term, I use it loosely. It's only really a couple places out there, whatever. But my point being is that all these three stresses combined together, the strong dollar, the increased energy prices, the lack of food supply, going to be absolutely horrendous for the world, if we see a dollar break out to the upside in huge strength. So while, of course, I want the dollar to break out to the upside eventually, I don't want it to happen in the middle of a world crisis that's going to literally kill, tens or hundreds of millions of people through extreme poverty or, other situations. So very important to keep a scope on all these things and see why, difference between like a chartist, and like an actual person, how some things can be good or bad for you. So next we have Tesla. Tesla's got our breakout of the descending channel. Obviously hit the majority of the measure move. We expect it to come back up here. Obviously a lot of this options driven, back above 1,000, hitting almost 1,100, new gigafactory. Elon Musk has got tweets. He's going to fight Putin. He's going to, I don't even know what his newest tweet is. I mean, he's going to send sex robots to everybody's house. I'm not sure what the most recent one is. Whatever it is, I'm sure it's super bullish, and there's definitely no manipulation going on. All I want to know is where's my Cybertruck, bro? So let's keep going. ARKK, obviously breaking out of this downtrend, up a nice little percent, a couple percent here, some bullish divergence. Still looks okay. I mean, this should, if this is not just complete trash, just straight up garbage, and Cathie Wood's not an absolute moron, this should run up to $90 and retest the 200 exponential, at least. It should run up to $9. Does it get there from 68? I mean, I would say no. It's straight up trash. There's a bunch of garbage, and Cathie Wood is dumb as fuck. But, that's just my opinion. It should go to 90, though, technically. But let's be real. Cathie Wood, underperformer. Or maybe she's the best performer, but she blew her load. And now she's just, evening back out. SMH, semiconductors, broke above the 200 exponential and simple. After hitting our targets to downside, should be bullish, building momentum in the bullish control zone, starting to roll over. Is this move done? We come back down here, it's going to look like maybe a inverted head and shoulders. Then we go higher. Sure, maybe. I mean, gotta see. I mean, Nvidia underperforming, should have broke through this level. Maybe consolidates around for a little bit and shoots up here. I still wouldn't rule out 321, but we did hit some resistance and get rejected. See what happens. Still a decent little trade in play right there. You know, I'm still bullish on NVIDIA, but semiconductors looking potentially toppy here, in my opinion. Netflix, just, I mean, absolute trash. What a trashity trash of a stock. I mean, this thing is just straight up garbage. Straight up garbage. I mean, but definitely a decent trade setup here, but just garbage. Apple having a nice breakout to the upside, nearing the new all-time highs. Obviously has a huge, you know, amount of influence on the indexes. You know, obviously, I mean, Apple just absolutely crushing it. We always talk about just Apple is amazing. Microsoft crushing, not quite as well. Obviously, a nice little trade setup in play. Already halfway there. Hit the 0.5 Fibonacci already. Still looks very strong. I mean, at this point in time, it's time to move the stop loss up to the entry level at like 300. And then, you know, basically risk-free trade to the upside for the completion of the measure move. Okay, so this is what we were talking about exactly with Amazon. The potential breakout, coming back down, retesting for support, and then potentially taking an upside trade. Now, do you just take it right now with a 12.6% upside potential, 4% downside potential for, you know, basically a 3-to-1 risk-reward ratio? Or do you wait for it to get slightly slower? I mean, if this is a trade that you just got to get in and you're just super sure that Amazon is just going to be bullish and just run forever and you don't want to miss out, you know, sure. I mean, this is an okay level to start dabbling. I would look for, you know, this level at the 200 exponential. Do I think this breaks out to new all-time highs or comes back down? If there's a recession looming, I think Amazon is going to do horribly. I think it's going to do terribly. I really do. So could go either way. I don't know. To me, this is not a buying level on Amazon. There's definitely an argument for the trade setup. I could be wrong, and you could, you know, make 3-to-1 on your trade. So risk-reward ratio, it's worth taking, honestly. And I could definitely be wrong. I would not be surprised if this thing went to new all-time highs. But again, it's so hard for me to just suddenly get bullish on the market. Time to get bullish was here, or in crypto at the bottom. Now is not, in my opinion, the time to get bullish. Google, we've got a little bit more of the measure move potential to the upside. Still looks pretty strong, building momentum, starting to roll over a little bit. Again, let's see what happens in the next 24 hours. And I think we'll have some, you know, come Friday, let's see what our Friday close looks like. And then all of a sudden it's going to be like, well, you were wrong. We're just going parabolic now. And I'll gladly admit that. Or it'll be the opposite. And it's like, wow, I guess that quarter rebalancing thing is really something because we're just completely melting down. Gold, barely hanging on to support. Had a very aggressive wick down right here. We've been looking at this descending triangle. Oh, actually, I probably posted that in the group. Sorry. This was my like hypothetical descending channel right here. You know, I don't know what it's going to actually do. I literally just threw that up here. There's not enough points for it to be like viable. I guess realistically, if you were going to use this channel and have it count for something, you would basically just maybe go by those wicks for right now. Again, this is just my hypothetical descending channel before the eventually breakout. I mean, arguably, though, it was probably better how I had it, honestly. Because it was the heart line was acting as resistance, you know, for that little bounce. So, you know, this basically looks like a little descending channel. We got a flat support right here. If we break down from this, we're probably going to retest one of these key levels down here. Gold losing momentum. Looks like it wants to print a buy signal right here, but I think gold's going to go down. It doesn't look good. Now, maybe the dollar loss, the dollar going down will allow gold to strengthen. That's definitely a possibility. They're sort of sketchy how they've been trading lately. Normally, there's longer term correlation or like inverse correlation between gold and dollars. Lately, it's just been like 1 minute they're correlated, 1 minute they're not. So we'll see. Silver came back down, touched the 200 exponential and simple, found some temporary support. Very volatile. I mean, that's not a normal move, obviously. You know, like a buck plus in a candle down like that. But it is holding support for now. Again, I think this is coming back down. So if this level holds, it's going to look real bullish. Again, descending triangle right there. If it holds and then consolidates for a bit, it's going to look real bullish. Converting back into a bull market, it's going to look okay. Right now, though, I don't know. Gold-silver ratio. Of course, gold just bursting back to the upside, you know, on this, our weekly chart. So, you know, trying to stop that cross from happening. We basically just been talking about the two scenarios right here. Either this breaks down and then silver is going parabolic and gaining value compared to gold. It probably means they're breaking out to the upside, or the opposite. If we, you know, reclaim this 821 cross and then move back up here and keep pushing on these 200 exponential and simple, gold is probably gaining value compared to silver, which can mean one of two things. Gold's going parabolic, silver's kind of lagging behind, or gold is selling off and silver is really fucking selling off. But either way, right now, if we avert the 821 cross and we continue to put in higher lows, it's going to look like I was right and we are coming back up here to the 0.5, to the B, to the measure move, one of these things right up here. So, 90 to 1, silvers to golds. So we'll see what happens. This looks to me, that was a pretty aggressive move to the upside. And, close on the weekly above the 821 cross, or on the, let's look at the monthly actually, since we're coming up on the end of the month here. Yeah, I mean, what is this going to look like too on the monthly? If if I was just to show you this chart right now, and it's like, okay, we were clearly in a bear trend here. Gold was losing value compared to silver. We obviously bottomed right here based on some divergence on shorter time frames. We came back up here, started retesting key levels, consolidating above the 821. We sold back off and found support. We sold back off and found support. So if we close this monthly above the 821, how close are we going to be to 821 cross? So what does the 821 cross do? Well, it leads us into a massive bull market gold to silver ratio. So, the last time, this was our last 821 cross on the monthly, and that was April of 2012. And in that time, gold compared to silver gained 43 to cross to peak 62%. So between 43 and 62% if we were going by cross to cross or cross to high. And then again, we did the same thing right here. This was our 2017. And then we went, peak to, this crazy parabolic blow off top, 80%. Gold gained 80% compared to silver. So if you bought silver right here, and then you bought gold right here, and then, you waited for the peak right here, the blow off top and the Rona dump, and then you looked at your gold and you looked at your silver, you lost almost half your value in your silver compared to gold. Obviously, that is terrible. So this cross right here is huge. And then if you just went cross to cross, it was 26%. So not as bad. So if we're about to get a move like this, is that going to be another, what was this? This was a stock market dump. This was the end of the world, the virus. This was everything's crashing. This was everybody scared. So are we about to get another one of those? Just kind of grind up here and then just a blow off top? And does that mean gold is going up or down? Could mean either one. Could mean either one. But this to me looks like it's about 1 day away from potentially getting the cross, or at least getting closer to the cross. At that point in time, it's 1, 2, 3, 4, 5 months in a row above the 821 and building momentum, hard buy signal coming out of the bearish control zone. It just looks to me bullish. It looks super bullish. Do I want to have gold right now or do I want to have silver right now? When I look at this chart, I say undeniably gold. Undeniably gold. Could that change? And all of a sudden we just massively break down, silver breaks out, and then, everything changes? It definitely could. And I'll be the first one to admit it. I always tell you guys when I'm wrong about something, and if you've never heard me say that before, it's just because I'm never wrong. So that was a joke, obviously. But seriously though, not often. THCX, obviously we had some of these pot stocks burst to the upside. I told you guys I was taking profits on some of these. Some still look bullish. Some don't look as bullish. Some don't look bullish at all. I'm still very, very bullish on pot stocks. Triple bullish divergence, nice little pop, good little percent on a lot of these things. I'm not greedy. I'm not greedy. And these things have just been melting down. So I don't want to get stuck holding the bag on another one of these pops and then meltdown, pops and then meltdown. So again, I'm slowly building positions. But when I say slowly, I mean slowly. And I'm taking profits when we get the quick burst. And then I would much rather buy into momentum at higher prices, to hold positions. So YOLO, again, looks much worse. We're basically doing what we said on ACB. We came back up to neckline, started topping out. Now we're looking like some rejections. Looks like we're going to come back down, potentially put in the right shoulder, maybe even get a second entry on this thing, and then we can come back up to the neckline again, and then eventually get the breakout. I don't know. Again, 25%. I took some off the table with these. Tilray, I took profits on Tilray quick, real quick. Because look, if something goes up 50% in like 2 days, I don't give a damn what it is, okay? It could be miracle magic dust that, makes your junk huge, or, feeds poor people and takes up no space, or allows you the ability to fly like a fairy, whatever it is. I don't care what it is. It goes up 50% in 2 candles. I don't give a shit how bullish I am on it. I'm taking profits. I'm out. on a big chunk of my position. So that's what I did. Could we go higher here? Do we get the rest of the move up? Sure. And I'm still participating on some of it, but I am not a greedy man. Okay. I like casual, easy profits, and I like to lock them in. Hexo just coming straight back down. I mean, nice little push up and just coming straight back down. So, does this go even lower again? I mean, I really would not be surprised to see these pot stocks put in lower lows. Half of these things are meme stocks at this point in time now too. People don't even realize they're actual real companies. And I'm not saying that like all Reddit traders are like, marijuana addicts. I don't know, potheads, druggies. I'm not saying that at all. Okay. There's lots of good things about these pot stocks. Some of them are not even pot. They're like cannabinoids or whatever the cool terms are for it now, fancy like doctor stuff, and they're helping people with seizures or dogs with seizures, whatever. I don't even care. None of that matters. I think pot, it should be as illegal as alcohol, in my opinion. If you're going to have pharmaceutical drugs that people can overdose and die on or become addicted to that are basically like legal heroin, do I think that pot and alcohol should be legal? Yes, fuck yeah. Holy shit, are you serious right now? If you can have a prescription to Xanax and, painkillers and stuff, I'm pretty sure you should be able to just buy some weed if you want to. I mean, I don't give a damn, but it is what it is. So in the future, I'm very bullish on these things. I think they will become mainstream. I think we'll look back and be like, oh man, this crazy prohibition on marijuanas, it was insane. When I was a kid, you couldn't even buy the marijuanas, and now you can, it grows on the side of the road everywhere, but the good stuff you got to pay for or grow yourself. I mean, that's probably what the future looks like. But the actual stocks themselves, they don't look great. They don't look great. They had some nice pops up to the upside here. We had a massive move up on Sundial Inc. Don't want to get greedy with this stuff, and then it just comes back down, and you just give back all the gains. In my opinion, I don't want to. You can do whatever you want. You can make all the money or lose all the money. That's completely up to you. CGC, same thing. I mean, we hit our target, like literally like within pennies. There's just, wait for it to come back down. Maybe if it starts to build support here and we start getting like that same chart, that inverted head and shoulders pattern, maybe I'll take another entry off that level and see if it holds at about 670. That could be our next trade setup. But again, as far as I'm concerned, we can move up here for sure. We could definitely go higher, but don't want to get greedy with these things and just get trapped, or lose, give back, beautiful gains that we got over a couple days. And it's the same thing with the meme stocks too. The pot stocks basically are meme stocks at this point in time. They're long term, sure, I believe in them. I don't believe in the meme stocks. But short term, they trade the same. It's like nobody gives a shit about them. Nobody gives a shit about them. Up 50%. Nobody gives a shit about them. Nobody gives a shit about them. Up 30%. I mean, let's be real. Uranium, like all these ones. Uranium, UEC, Cameco, all the ones that I've been talking about, Uranium Royalty Corp, all of these ones look exactly the same. It looks like we're basically going to print lower highs here. A couple of them actually put in higher highs, but I really just think that these are going to cool off for a little bit. We'll see what happens in the energy space. It looks like oil is going to cool off, maybe nat gas and stuff, maybe not. But I'm definitely looking for opportunities in these. And you guys know I'm very bullish on, hydrogen and nickel and all these other like commodities, copper, everything like that long term. But right now is just, in my opinion, the markets are looking pretty toppy in a lot of different places. So let's get on to our cryptos. Obviously, if you are just tuning in, make sure to smash up that like button, smash it to the up-hand side. Not too hard though, be gentle. Caress the like button for me. Just give it a little poke, but up. You fuck it. You can put it down if you want. I don't care. Just hit one of the buttons, the like or the dislike. It's okay with me. But yeah, make sure to like, subscribe, throw me a comment up there. If you are in the chat right now, let me know how you're feeling. Are you super bullish right now? Are you super bearish right now? Are you feeling like maybe this, quarter rebalancing might be a thing? Are you sort of feeling like the end of the month, potential like kind of reversal on some of this stuff might be a thing? Are you super fucking bullish on yields and they're just going to 1,000,000% and everybody's going to lose everything and then you're just going to buy it up for pennies? You feel like the bond market's about to just explode to the upside? Are you bullish on pot stocks but bearish on pot? Are you bearish on pot stocks but, smoking a joint right now? Just leave me a comment, whatever. Interact a little bit. So let's take a look at our cryptos. If you are just tuning in, remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. So we're seeing some very good signs right here. This is what we've been talking about. This is what we want to see. We have reclaimed the 200 exponential and simple. They are sloped back to the upside. This is our our CME futures chart. This one did not give us a false alarm along the way. So this is much more assuring than the spot market. Now, granted, we did get a weird gap up at the end of the week there, when above the 200 exponential and simple. So, was this just a little bit of like a nudge from the spot market? Like, hey, go ahead. You can do it, buddy. I mean, sure. But it still counts. I mean, we see that bullish divergence. Got a nice little move up. I still have part of the spot position open for now. But I have, taken profits along the way. Happy to take profits along the way too. I took profits at the 200 exponential right here. I took profits at somewhere around this level. I think it was like 47 or something like that in this consolidation range. Oh, it was at the top of the channel. And I'm fine with that. Still have part of the position open for now. Obviously definitely made some gains on it. So glad to give a little bit back on the remaining position or make some more. But I'm not overly bullish right now, but starting to look much better. The last couple times, here we hit bullish control zone, came back down, had a nice pullback, continued higher. Here, left the bullish control zone, bearish divergence, came down much lower. Here, bullish control zone, topped out, came all the way back down to revisit the lows. So here, bullish control zone, broke above key resistance. Does it hold as support, or do we come back down here and give it all back? Could go either way. So, but I'm very confident myself in saying, feeling, trading that we come back down to like the 44,400 range, or potentially much, much lower, like 40,000 range. I'm very comfortable re-entering between 40 and 44,000 if the market still looks bullish. But I'm very confident that we do come back down to those levels. Now, maybe Michael Saylor buying 200 million more in Bitcoin and tweeting about it propels the price higher. Arguably, this is just a run-up for the Bitcoin conference, or it was just oversold, or it was the bullish divergence, or, it was the fact that Bitcoin's directly correlated to the stock market and the stock market had a dead cat bounce. Maybe it's rebalancing. Whatever it is, doesn't matter. We're at the levels. Keep in mind, this is our old chart. This is the ABC pattern that we have drawn months ago. Before we even hit the bottom down here, this was the hypothetical ABC. You can go back and see. I mean, I drew this chart back when we were at like this level or something. This was like December of last year. So here we are a quarter later, 3 months later, and we literally have done almost all of what I said. Technically, I was more bullish. So, I may be the most bullish, but I also might be the most bearish, but I also might be short-term more bullish. So it's crazy as it sounds. You guys know that I'm super bullish on Bitcoin long-term, and I've literally drawn a roadmap to multi-million-dollar Bitcoin, potentially, but I've also drawn a roadmap to, $3,000 Bitcoin, potentially. But in the meantime, you guys know that my target was literally hit to the exact T down here. That wick came down in advance to our target after we had already put it in place at 32,000, perfectly hit our key level on the Fibonacci, which if we pay attention, what is that key level? It is the 236 in green of the macro move going all the way back down to the bottom. So this is our $3,000 low to our $70,000 high. And what did we do? We came down. Now here we already came down, but that wasn't our high necessarily, or maybe it was. But then we came higher than that. And then here we came down to 236. So we confirmed that we have potentially topped out right here. And now this is what? Our dead cat bounce, the relief rally, the attempt to save the trend, the push back up by, for our last point of supply to exit positions before we go into a bear market, whatever it is. Maybe we reclaim these levels and we go to the moon. Whatever it is, it's expected, anticipated, predicted. So we hit the 0.5. Next target is potentially the 618 or potentially all the way up here at like 53, 54,000. Measure move slightly higher. We're just doing what we've been expecting. But the problem is if I'm right about this, well then, if I was right about this, okay, let's be real here. All right, if I was right about this, bearish divergence, and then we went much lower, and then I was right about this bullish divergence, and then we went much higher, and then I was right about this double top bearish divergence of the 1.618 Fibonacci extension of the entire bull market, and then I was right about this pullback to the 30-something thousand range, and then I was right about this. Well, I would say my track record is pretty good, and then if I'm right again, it probably not going to be good for Bitcoin's price, and we're probably going to 20,000. So based on just what's happened here recently and what potentially could be happening, I'm cautious that we're headed to $20,000. Now, do we go to 20,000 from 47,000? Do we go to 20,000 from 54,000? Do we not go to 20,000 at all? All possibilities, all possibilities. But you have to be very, very careful. Now, when we get this blue cross right here and we reclaim the bullish control zone, we had a nice run up last time. We had a really nice run up that time. So don't want to get overly bearish right here either. But again, I'm cautiously, optimistically bullish for now. If we come back down here, hold support, and then start moving up, I'm going to start getting more and more bullish. Also, again, the quarter rebalancing and everything has me probably a little more cautious or bearish than I should be. But typically we see these big changes at end of year, end of quarter, end of half, big reversals, market changes, etc. So again, nasty, nasty chart. These things are getting just absolutely disgusting, and I apologize for that. But at the same time, I'm trying to show you all the just vomit of technical analysis that's taking place and why it's so important. The 200 simple on the daily, we tagged it, we got rejected at that key fib level. Again, I could delete a lot of this stuff or whatever and just show you like one little chart, one little line like everybody else does, and you're like, yeah, if you draw enough stuff on your chart, of course it's going to hit one of your lines. That's all bullshit. Yeah, you're actually probably right. But it just so happens to hit exactly onto our lines and, to the T all the time that we put in there in advance and expect it to hit. So I would say probably we should use these lines. So we hit the 200 simple, we hit the 0.5, next target to the upside if we're bullish and we get that Bitcoin pump over the weekend again, 52,000 on spot market, the 618 internal retracement. We saw clear resistance on the way down there. We obviously have clear resistance, along these levels back here. We have the 200 simple moving average. So that's what we're looking at. Do we get a pullback down to 44,000 and that's a buying opportunity? Do we get a pullback all the way down to 40,000? That's a buying opportunity. There's definitely some options that could happen here. We look pretty tired. Last time, this is when we got tired, we rolled over. Last time, now we got tired and rolled over. I don't know. Here we got tired, we rolled over bad. Here we got tired, we rolled over pretty bad. Whenever we get into this bullish control zone, since, this whole time was a massive bull market, it's all bullish control zones with just itty-litty little bearish control zones along the way. But it's all red, all bullish, straight up, just pumpy pump time. Here we start seeing bearish control zone, little bearish control zone, some bullish control zone, but it's like, uh-oh, hang on. Something's not the same anymore. Now we get two bears and then a bull. And then we get, another bull and then two more bears. And then we get another bull and then we get, another bear. And then another bull. And then we really want to see this come back down and find support and not let the bears take control. And then we get like a bull, and then we can start getting bullish on this again. So looks okay for now. Momentum still in our favor. At resistance, not an area I want to be buying. Again, I'm taking profits at these levels. But again, we could easily go much higher. And that's totally cool. That's great. I mean, it's so much easier to make money in a bull market. Potentially reclaiming the 8 and 21, trying to find support here. We probably are going to end this week down at like 44.6. I mean, I would expect. But after that, if that holds support, we probably go higher. And then most importantly, let's look at the monthly. Let's look at our monthly. Okay, so we've been talking about these key levels. We were talking about the 8 and the 21 and how 37.8 is support and how 45.7 is resistance. So we're slightly above resistance. If we close this monthly above resistance, it's going to look good. We're only a day away. That's going to look good. Definitely looks good if we can reclaim the 8 and hold above it. But we have to be very careful because we're still seeing just nonstop monthly red histograms. We're definitely still just strengthening. I mean, we're not even going down on the stochastics. We're strengthening to the downside while price action is moving up. Can that change? Sure. But it does not look great to me. This looks similar to what we see back here in this range before the breakdown. Now, granted, here we had a similar situation, and then we actually came up higher, closed above it, and then we sold off, and then capitulation, quote unquote, black swan, Rona event, whatever. Who cares? Call it a black swan, call it a white swan, call it a meteorite, a chicken tender, call it whatever you want. I don't give a damn. If the chart told me ahead of time it wasn't that black swan, it wasn't unpredictable if our method can identify it ahead of time. It's like, oh, it was this, it was that. Well, it was probably just the news is what you bought. But the chart was already planning on doing that. So Ethereum, getting rejected at 200 simple. I mean, this trade setup has played out perfectly, 20%. We risked 6.75%. We made 20%, 3-to-1 risk-reward ratio, straight up measure move hit, 200 simple hit, top of the channel hit. Congratulations to anyone who took this trade, based on their own technical analysis, because obviously I'm not presenting technical setups or anything for people to take because it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research, trade responsibly. Obviously, I'm just drawing colorful things on charts for fun, and this is for entertainment purposes only. You will not make any money if you do any of the things you see on the stream, and you will only trade with fantasy stuff because none of this is for you to do or act or make money on or anything like that. So once we get our targets hit, we take the profits, we at least hold some of those profits, and then we trail our stop loss. So there's no way that we can turn a profitable trade into an unprofitable trade. Crypto market cap reclaimed our levels. This just looks like the Bitcoin chart. Looks the same, looks good. Reclaiming key levels, trying to cross back to the upside. Bitcoin dominance chart. Looks like this thing's trying to roll back over. So if this breaks back down here, the aversion of the Bitcoin cross means alts are probably just going to keep stealing market cap from Bitcoin. So, I was expecting us to kind of consolidate here and then come back up. Maybe we get rejected, we go lower. Definitely is a possibility that alts are about to pop off. If alts gain value compared to Bitcoin, it's probably bullish for the whole space, because typically we see alts gaining value in a bull market and losing value in a bear market. So if this breaks back down here and we keep going down on the weekly, granted there's a few days left, it probably means alts are looking good, which means we're probably bullish in the space. So bearish engulfing candle on the monthly, if we were to just close right now, again, we're down at those levels, triple bullish divergence, and we're down in the bearish control zone where it's like, how much lower can we really go here? I mean, could we go lower? We definitely could. We're at 8.69%, so we could definitely go lower. But I mean, this is pretty low. The last time we saw that, this was the massive bottom or the top of the bull market in 2017, 2018. So is this going to be the top of the bull market in, 2021, 2022? I mean, if you told me around this level, it was like, hey, do you want to be bullish right now or bearish right now based on this monthly chart, and everything's been going parabolic and it looks like basically we can't go much lower. This to me looks like a top in the markets or a bottom in this indicator. So again, we're at those levels and it's like, yeah, but the bulls are in control. So that means altcoins are going to go parabolic and Bitcoin's going to die because it's boomer coin and it's trash and no one likes it. Sure, I'll give you that. But we're also at the levels where it's like, yeah, the bears are in control. They've been in control for month after month after month, and they can't stay in control indefinitely. And if I was going to bet, if you're going to bet, when you're in the bearish control zone, the bears are in control for sure. And definitely you could go lower for sure. But when do we take our positions? We take our positions at the bottom of the zone. We get bullish. At support, we get bullish. And we sell at the top. So when the bulls are in control right here, you're like, yeah, but it's bullish control zone. Why would we want to get out of Bitcoin right here in the bullish control zone? Because the bulls have been in control and pulled it all the way up from the bearish control zone to where they're completely dominating and the bears are nowhere to be found. So we don't just want to like blindly sell and be like, oh, that's it. We touched the bullish control zone, so now it's over. But that's the areas where we want to be taking profits and de-risking from our positions. So we want to be entering positions at the bottom of the range when it's green. That's why it's green. It's telling us, hey, the bears are in control. They've been in control. People are losing hope. The market is giving up. They think this is dead. It's over. Bitcoin's garbage. And that's when we see the green light. And it's like, now we're bullish. That's why I use the color green. So mentally, when you see a green light, you say, go. Green is go. Because otherwise it would be the other way around. Otherwise the bearish control zone would be red. And you're like, oh, the bears are in control. This is bad. It's bad. It's terrible. It's red. Stop. Get out of here. That's why I have them reversed. I use them opposite. And the same thing, when the bulls are in control, it turns red because that's when you're cautious. You're like, okay, the bulls are in control. They're dominating. The bears are dead. They're nowhere to be found. They've been skinned. They've been scalped. We're wearing them around, staying warm in the winter. But we also want to be cautious because winter might be over. It might be time. So that's why I use these colors, subconsciously, subliminally, whatever. Green is a positive color and makes you like good, think good. Red is a bad color and it makes you like, no, stop, caution. So that's why we use these colors. So we're cautious on altcoins right down here. We're cautious on altcoins down here. We're cautious on Bitcoin right here. So do I want to be buying Bitcoin at these levels? or do I want to be buying altcoins at these levels? I want to be getting out of altcoins and taking profits at these levels down here. So we had some nice pops on some of these altcoins and did well with them, but we want to be real careful. Real careful. You don't want to get trapped in, cum rocket because we thought it was going to the moon or moon coin. Damn it, I can't think of it. There's too many shit coins. I can't even keep them straight anymore. What's the moon one called? Safe Moon. It's safe. And we're going to the moon, guys. If that doesn't sell you, I don't know what will. Maybe if we just pay someone who's famous with Instagram followers, then you'll believe me. AVAX, Avalanche, finally got our little breakout of the descending channel. Moved up to the 382. That was our first key resistance. The next one is that 236 at 115. So, I mean, that's like a 15% move if we see continuation from here. The problem is now is, yeah, I mean, we're basically in the middle of the zone. The stop loss would have to be so low. Realistically, the only way you could take a trade like this is basically just with the previous day's candle. Keep a tight stop like 4% and then a target of like 20%. You probably would get stopped out on this one, but honestly, I mean, it's like a 3.5 to 1 risk reward ratio. So 15.6% upside with the 236 target at 115. Stop loss below the previous daily open on the candle at, what is that? 95.36. And then entry right here. But you probably would get stopped out. Solana, I lost my chart on this. Maybe I just opened up the wrong one. I got to update this browser again. It's fighting with TradingView and wouldn't let me load up charts again. So I don't know what the hell's going on here. Whatever TradingView is doing, the browser's having to try to fight it and like constantly updating. And you guys know me, I don't like updating my computer often because then I have to re-put in all my charts again and it's a pain in the ass. And yeah, I mean, I'm definitely not doing it twice in 1 week. So pain in my ass. Fucking TradingView is straight garbage. If I hadn't literally put tens of thousands of hours into TradingView and PineScript and all this stuff, I would literally just quit and go do something else. But instead, I will just be a good little bitch and continue using TradingView, and I'll just do what people do best, and that is just complain but do nothing about it. So Solana above the 200 exponential. Next target is 200 simple up here at 150. We could also do a Fibonacci internal retracement. I can't remember what the levels were, but so we're at the 382. The 0.5 is slightly below that. The 618 slightly above it. So could this thing just have a burst to the upside to like 160? It could. $40. That'd be like, 25% move to the upside. It could. It's pretty high up here. I think we have it looks like we're going to have another bullish weekend. We finally had a decent one, that little pop at the end of last weekend. So we probably have a little green party this weekend. Or just go straight to zero. So I have no idea what I'm talking about. Matic hit the majority or half the trade so far. Still another like 25% or 20% or so to the upside. So still thick and juicy. Definitely want to be pulling our stop loss back up to our entry position. So now it's a risk-free trade to the upside. Potentially could even trail that stop up even higher. But next target up here at that previous resistance, which just happens to be the 236 of the downturn. $2 for Matic. Flux. The old flux capacitor starting to look like a blow off top right here. Could not get above the target. Hit the trade setup. Nice 33%. Congratulations if you locked in those gains. 5.4 to 1 risk reward ratio. It's so crazy how we put these trade setups on these charts all over all kinds of assets, and then they play out perfectly, and then they get hit perfectly. It's absolutely insane. It's almost like we know what we're doing. It's crazy. Thank God there's only, on average, 150 to 200 people that ever see this. So Flux hit the first trade setup, could easily go higher. 618 could easily go to 220. We could have a full-on just skyrocket to the moon of $2.64. I have no idea what Flux is. I did not take this trade, but it does look pretty juicy right now. I mean, this to me looks like a double bottom. So we have an atom, like sharp, pointy bottom right here. Here, we can draw it out because we're getting towards the end. And again, I couldn't load up some of the other charts I wanted to load up, unfortunately. So that's our atom. It's blue to symbol that, signify that it's a man or a boy or whatever. And then, obviously Eve, a female. So, we'll use the pink, the feminine color to represent Eve. I know some people don't believe in boys and girls and it's all just made up fantasy now, but You know, I'm OG. I'm old school. So I still think, you know, boys and girls are like a thing. So, and then we have our breakout, which would be the measure move breakout of the atom, the sharp, pointy man bottom, and then the eve, the round, thick, juicy bottom. In no way a metaphor for ass at all. And then obviously our breakout would be the neckline resistance right here, which is where we're basically at right now. So then that breakout would be the measure move from the bottom to the top. Obviously, if it lines up with some Fibonacci's as well, could be a pretty aggressive move to the upside. I mean, just from where we're at right now, this could be a thick and juicy pump or a complete rejection and go straight to zero, because I have no idea what this is. But 41% just to the 786. If it goes back to 886, it probably goes back and retests the highs. If it retests the highs, it probably just goes parabolic to $100 gazillion. But before I get excited about 100 gazillion, I would probably look at like $2.21 and $2.64 as the targets. So yeah, that's it. I had a couple other requests that I actually couldn't get TradingView's stupid ass to load up. And apparently I need to reboot my PC once again and do another stupid effing update. So I'll do those in the group and post them up for you guys there. There's a couple I just didn't get to from private message and in the group chat. So I will post up some detailed explanations and charts in there. So, but that is going to do it for today. Let me jump over in the comments and say what's up to everybody. Appreciate everybody showing up here. UniQ says, I'm bullish on bonds. There you go, bro. I mean, if you're going to be bullish on bonds, it should be after a meltdown that has lasted for months with record outflows at the end of a quarter and potential rebalancing. Now is probably a good time to be bullish on bonds. Not while they're just completely melting down and you're the bond king who's literally getting wrecked and absolutely destroyed, losing everything. But you hit 100,000 subscribers. So, congratulations, Bond King. I don't know if that's 100,000 trolls or if there's still people that follow you that have money left. I mean, I doubt it, but, or maybe they just follow you and laugh. I mean, I've looked at the comment sections. They're pretty entertaining. They're like, I just do the opposite of what this dude says. He's always wrong. I've never seen someone be so wrong for so long. Every time something happens, he flips the script. The only thing he's consistent on is being wrong about bonds. That's literally reading comments from the Bond King's comment section. It's actually really funny. I love his comment section. And he's actually not that bad at technical analysis. He'll say things that make sense. And I'm like, oh yeah, some good TA. He's going to mix it up today. And then he's like, and that's why I'm bullish on bonds. I'm like, wait a minute, moron. Everything you just said is bearish on bonds and they're melting down. And he's like, and that's why I'm bullish on bonds, because of fundamentals. And I'm like, so you just did 20 minutes worth of technical analysis, and then everything you said, you invalidated and just said, I'm bullish because fundamentals. Okay, idiot. But no, for real though, I think he's going to have his day because it looks like we're finally going to be bullish on bonds, short term at least. Eli Karchov, waiting for pot stocks to take out the local high before putting on any size. To your point, just a string of lower lows and highs thus far. Yeah, exactly. And we had triple bullish divergence and a complete meltdown in what has been the worst performing asset class for basically the last 2+ years. I mean, God forbid we do go into an actual recession. Honestly, though, that could be a huge catalyst for alcohol, tobacco, and pot stocks. Because what do people do when life sucks? They do drugs, alcohol, and tobacco, whatever that falls in there. They love it. So if things get bad, pot stocks probably do good, because I think more people want pot, more people want alcohol, more people want tobacco, because they're like, life sucks, might as well at least get high. But I do agree with you, man. This to me just looks like explosive bullish divergence playing out. And look, when something goes up 50% in 2 days, I'm taking profits. I don't care what it is. Do not care what it is. Honkiness, good to see you, brother. VIX action tomorrow is key for me. On pot stocks, there are some legalized pot bill that will be voted on in a week or so. Yeah, and I mean, you guys know I've been talking about pot stocks and how I'm super bullish this year, and I think that's going to be a giant talking point. Another Democrat trick or lie or bribe for people to come out and vote Dems. They basically say, we're going to legalize pot and everything's cool. And, I'm not against it by any means. I think they should. I've made that very clear. But I think that's a key talking point that they're going to be bringing up more and more going into the midterms. Do I think pot's going to be legalized federally anytime this year? No, I do not. Eventually, I do think it will, though. So there's definitely some bullish catalysts for pot stocks. But it doesn't have to get legalized. There just has to be talk about it. You know, no one gives a shit about pot stocks, nor have they for like 3 or 4 years. So if all of a sudden they're just back in the media and they start moving and they're bullish, sure, it could look good. But right now, the charts look absolutely horrendous. But they're at deep value levels. I mean, we've looked at the book value on some of these companies. I mean, like some of the big ones, Tilray, ACB, some of the little ones like Hexo, some of the other ones, I mean, the ones we always look at, Sundial, and what's another one? Whatever. Some of the other ones we've looked at don't look quite as good, but most of them are trading at a discount to book value of like 50% or like some ridiculous multiple, like ridiculously low. So, long term, a year, 2 years, 5 years from now, I think unless you pick the worst one, chances are they either get bought out or they go parabolic in the meantime. So, Crypto Deli says, your opinion on the Duquan BTC buys in the month to come? Holy shit. I don't know what you're saying. Your opinion on the Duquan BTC buys in the months to come? Crypto Deli, I don't know what you're talking about, dude. Duquan? Huh. Yeah, I'm really not sure what you're talking about, man. Maybe, is that like some news or something I haven't heard about? Or is that a combination of English and another language? Or just a spelling error? Or maybe I just need to sleep more and read better? Let me know. I'm glad to answer your question. I just don't know what you're saying. Ralph Smith says, great macro explanation at the beginning. Awesome, man. Thank you, brother. Appreciate you. I will stick around for just one more second in case Deli is still here and responds. Luna, didn't it break out to new all-time highs? I would bring up the chart, but TradingView is still being a double douche, and it won't let me. So, unfortunately, not going to happen on this stream. Oh, is that what you're talking about? Luna was buying a bunch of, yeah. Okay, I got you. Yeah. I did hear about that. I'm sorry. Yeah, Luna is like, okay, so that's what Luna is, right? Or Terra is or whatever. They're basically buying a bunch of Bitcoin and then it's a Bitcoin backed stable coin instead of like a dollar backed or like some other, bond backed, etc. stable coin. Yeah, okay, I got you, brother. Yeah, sorry, I didn't get what you're talking about with that. Is that the guy's name? Is that what it is? Luna CEO Duquan. Okay, buying 10 billion in Bitcoin. I did hear about that. That's I mean it's equally bullish like the Michael Saylor news. Obviously 10 billion is more than 200 million, so it's 20 times more bullish, I guess. Social media stuff about Duquan, Luna leadership. They're filling up their Luna treasury with Bitcoin instead of stablecoins to support the USDD. Yeah. See, the only problem with that is if you back a stablecoin with an extremely volatile asset, you can get yourself into some big trouble. So if you're going to back a stablecoin with crypto and then crypto melts down, let's say Bitcoin goes down 50% and we go into a bear market, I mean, are you going to be able to hold your peg on that stablecoin? That's why people back it with typically people use dollars, is because overall it's typically stable, which is why I was making my argument about how if the dollar goes parabolic, it's extremely bad for the world. Think about it, it's the other way around. If the stable coin is backed by Bitcoin and then Bitcoin has a meltdown, that's the opposite of, the dollar going parabolic. So if it has a meltdown, now all of a sudden is the stable coin going to be good? And then anybody that's trading in and out of those is basically getting, completely shafted. Because if the stable coin loses its peg because it's backed by Bitcoin, Bitcoin goes down 50%, and then all of a sudden the stable coin, a stable coin shouldn't go down more than 1 or 2% maximum. It should not have like any volatility within it. So if it goes down 10% or 20% or 50% because the treasury backing it, or let's just say Bitcoin goes down 50% and then just holds right there, then now all of a sudden they're missing 50% of their value that's supposed to back this up. So now, depending on, I know it's not an American company, but you're supposed to be backed 1-to-1 and that's your claim. Now all of a sudden, are you a liar? Now all of a sudden you're violating like laws? Are you, it's a real bad situation to be in, when you have volatility on the thing you're backed by. Yeah, basically burn your Luna for a stable. Yeah. And again, I don't even know where I heard about that. I don't even, to tell you guys the truth, towards the end of the bull markets, I get really lazy just looking into new coins because so many of them are just bullshit. And by the end of the bull market cycles, you know, it was that way the last couple. By the end of the bull market cycles, they sound so good, and they've got the white papers down, and the pitches are down, and these guys have been participating in various projects, and it just sounds so good. And then 99% of them, you know, end up as a Ponzi scheme or going to zero or total trash, or they never deliver. So by the end of the bull markets, I honestly just don't even I just don't even pay attention anymore to the new stuff. And I don't know when Terra Luna came out or whatever. I've been hearing about it for a while, but we're just so far into the bull market at this point in time, potentially topping out. Like for me, I'm just I'm just being lazy, to tell you the truth. You guys know I'm lazy. You guys know how I trade, okay? I tell you all the time. You know, I blow up one of those donuts. I don't even blow it up myself. Those little pool floaties, you know, sometimes I'll get an exciting one. It'll be like an alligator or something. You know, I blow it up. I get a floating cooler. Okay, I fill it up with cold beverages and ice and, you know, maybe some like beef jerky or some cheese or something to snack on. You know, maybe some crackers, whatever, depending on my mood. Some fruit snacks. Okay, and then, you know, I meet up with my friends and we go to the river or, you know, whatever. And then, you know, we all just get on our little floaties. Some are shaped like alligators. Some are shaped like unicorns. Some are just like old school, you know, donuts. Some are just like lazy little rafts. And then, you know, we just lay in the river. We float down the river and we just get drunk and eat food. Okay. And that's a metaphor for my trading. I'm just super lazy. Okay. I'll get off my little alligator floaty for a little bit. I'll swim around. I'll go against the current. I'll go grab a cool looking stick or a rock, or, you know, poke a caterpillar that I see on the land or something, or, you know, go mess with a turtle. But after a while, I just get back on my raft and I just float downstream. Okay. So for me, it's just so much simpler to just stick with the flow, you know, go with the flow, not fight it, not, you know, work too hard on something that doesn't need to be worked hard for. Spend your time on the TA, you know, not on trying to figure out which of these like random BS whatevers are going to pump. And it's the same way with meme stocks. I don't hate meme stocks or anything. I hate what they do to people. You can make a bunch of money in a meme stock, but most people that make money on a meme stock one time end up losing way more in the long run. So if you make money on a meme stock and then you get out, you are the fucking man. And I'm high-fiving you left and right. You're awesome. If you see a setup on a meme stock and you take advantage of it, some little 50% pop or whatever, you're fucking awesome. Just don't be the guy who gives it back and more. That's why I hate meme stocks. That's why I talk so much trash about AMC and GME and Bed Bath & Beyond and all these other ones. I really don't care. I honestly don't care about them. I hate what they do to people. They give people like false hopes. Dogecoin was the same way too. You know, I bought not that much money worth of Dogecoin way back when, just because it was so cheap and it was just garbage. And then it just went absolutely parabolic. And then I just hated it because people were FOMOing into Dogecoin as it's like parabolic, when I was buying it for fractions of a fraction of a penny, you know, and it was like a joke and you just forget about it. And then all of a sudden those fractions of a fraction of a penny are worth 60 something cents. And then people are buying in on Dogecoin at 25 cents, 50 cents, whatever. Most people get wiped out. Most people weren't buying Dogecoin when it was a fraction of a penny. And that's why I hate those meme stocks and the meme cryptos and all that stuff, because they just end up wrecking people and they're total garbage. They're never going to deliver. They're never going to be a viable company. Like AMC buying a gold mine. Like what? I mean, what are you doing? You know, and I don't hate those companies or anything. I'm glad for people to make money, but you know, it just pisses me off. I know more people are losing money on those than winning on them. And like the channels that are dedicated to AMC or GME or, you know, Wall Street Bets or Wall Street Silver, none of those people make any money except for off of the people that are joining the cult. Like think about the Ripple cult, the XRP cult is like one. This is a perfect example. There's a strong following cult behind XRP. I've made plenty of money off XRP. There was a time when I was even actually bullish on XRP, like fundamentally. And then I realized it's just total trash and it's a cult. And like the last cult cycle was in 2018 top. And now this whole 4-year period has gone by and we haven't even hit that high again. So it means the cult is dying. But the problem is there's still hundreds of thousands of people in that cult. I mean, you can watch like XRP like channels on YouTube or XRP like trade groups or whatever, and there's still people that are like, XRP is going to $12. Oh man, once XRP takes over the global, Swift network, it's going to be worth $100, $150, $200, $350. Cliff High said XRP is the next, financial asset and it's going to take over the world. There's literally people that believe this cult bullshit, and those people, because they joined that cult, because they bought in, a lot of those people are negative. And not only are they negative, but they're negative after years, and everything else has gone absolutely parabolic. And some of those people have been in the crypto space for years and are still down. And that is like the most unfortunate thing. And that's how I feel about the meme stocks. You get trapped in one of these things and then it goes down and it never goes back up again. You look at these things, they're a dead cat, they're a dead heartbeat chart. They have one big burst to the upside and then go way down and just kind of go sideways. And then they have another burst to the upside, but lower. And then another burst to the upside, but lower and lower and lower. And then eventually they just go sideways forever and they just completely flatline and the cult dies. Well, hopefully. Eli said, yeah, complete Ponzi. Yeah, it reminds me of Tether, dude. It reminds me of Tether. You're like, oh, I'm going to issue, $1 million in Tether, and then I'm going to sell it to people. And then they buy it with dollars. And then you're like, oh, okay, I'm going to take this $1 million, and then I'm going to put it in our Tether reserves. And then I'm going to issue another $1 million worth of Tether. And then, go out into the market and buy Bitcoin with that Tether. And now there's $2 million worth of Tether in the market, but there's only $1 million worth of reserves. And then they're like, oh yeah, we're going to issue another $2 million worth of reserves. So they make $2 million more worth of Tether. They take that Tether, go out into the market, and then buy Bitcoin with it. So now there's more Tether flowing out in the market. So now there's $4 million worth of Tether floating out in the market. There's $1 million worth of cash reserves, and then there's $3 million worth of Bitcoin. And it's like, well, wait a minute. How did $1 million turn into $4 million? And there's all this Tether floating around. It's literally the dollar Ponzi scheme all over again. So if you don't regulate who's making the dollars, and then you don't regulate when they're allowed to make dollars, because they don't have to show their books and show their reserves, you can literally just be like, hey, we're going to make a billion Tether, and then we're just going to kind of leak it out into the market. And then we're going to pump up the whole crypto market because we're going to create buying pressure using that Tether, and we're going to buy a bunch of Bitcoin with it or a bunch of altcoins with it or whatever. And then the value goes up, and now the value goes up of our holdings. And then we're like, oh, well, now we got more holdings in our reserves. So now we're just going to go out and print more Tether because now we have the reserves to back it up. And it's just a giant bubble and bubble and bubble. And then if anything ever crashes, you realize that it's just a bubble and there's nothing inside of it. It's just a big hollow bubble and there's nothing. And that was part of the scare with like the Chinese reserves and everything, in like the real estate mortgage market. So total Ponzi scheme, dude. And it's so freaking illegal. It's like SEC's like, just pay $100 million and you're gravy, bro. Crypto Deli says, what effect do you think is going to have on price action for Bitcoin in the months to come? Do you think it's going to pull the price up? I mean, I honestly don't know, dude. I don't know when they're going to get the money. I don't know when they're going to buy the money. I don't know if they're going to buy on the open market. I don't know anything about the situation. And honestly, I don't really look at fundamentals, man. I go by technicals. So I don't see anything in the charts right now that hasn't already been predicted by the technicals. Literally everything that's happened in the charts, regardless of if Michael Saylor buys an extra 200 million in Bitcoin, regardless of Bitcoin volcano bonds, regardless of the newest Ponzi scheme or the newest stablecoin or $200 billion that's going to get bought in crypto, regardless of any of that, everything that we've said was happening on the charts, from the triple bullish divergence at the top of the market to the triple or bearish divergence, the triple bullish divergence at the bottom of the market, everything has done exactly what the technicals have done. So for me, the fundamentals are just noise. Fundamentally, long-term, I'm bullish on Bitcoin because of network effect and, the idea behind it, the way it's structured with mining and its relationship to gold and, all this different stuff. So fundamentally, I'm bullish on Bitcoin. Would it surprise me if 10 years from now, Bitcoin was basically obsolete, still had some value, but something else came along that was much better, or maybe something happened to the chain and it got hacked or compromised or, whatever. It wouldn't surprise me at all. Because the first thing doesn't usually last. Like, no one is using dial-up internet anymore. Something better came along and then that became obsolete. So eventually that will happen to Bitcoin, in my opinion. And it's like, yeah, but the network effect, bro, and the value and this and that and the limited amount and the decentralized. And okay, sure. But what was AOL? What was AOL's network effect? How many people went to using America Online like dial-up, like internet? And now where is it now? It had a massive network effect. The adoption curve was just absolutely parabolic on that. But it still went away. It still went away. So, it's the fundamentals, man, it's super hard to try to figure out. And when you hear news like, oh, they're going to buy $200 billion worth of Bitcoin, it's like, well, is that already priced in? Did people already know they're going to buy $200 billion worth of Bitcoin? And that's why we came up from 30,000 to, 48,000. And now after that, there's not going to be the buying pressure, and that people are already front running that. And now when they go to actually buy, they're going to sell into the liquidity. The same thing they do in the stock market. When they're doing like a company announces, hey, we're going to do, $10 billion worth of stock buybacks. And then you find out that it just happens to correspond with like the CEOs or like, early investors or whatever selling into the stock buybacks. So it's like, is that the best thing for your shareholders? Is that the best thing for the crypto market? Does that mean prices go up, or does it mean it's already priced in? In my opinion, man, best thing to do for me, stick to the technicals. Fundamentals are cool and they're fun and they're exciting and they give us something to talk about. But there's very few times ever when I've seen at least short to medium term where something fundamentally happens and affects the market, in a good or bad way. It might be a little fear or a little excitement, but typically does not last or affect the market long term. Eli says, minute Bitcoin crashes and Luna follows, the peg is going to be off like a rock. Yeah, and I mean, it's the same thing like with Tether. And, maybe if the Ponzi goes on long enough and they make responsible decisions, they can actually, buy enough stuff that it's like, oh, now we can maintain the peg forever. We created a bunch of value out of nothing, but now we have enough value retained that we can back it up and it could be legit. But the truth is, if somebody's already doing something shady in the beginning or starts off as a liar or a thief or a scammer or, whatever, they're probably not going to just all of a sudden be a better person or a good person or start doing things correctly. They're probably just going to keep getting greedy and keep doing snake things or grimy things or whatever. And it's probably just going to get worse and worse and worse. And then eventually implode. Arturox says, I made quite a bit from Safe Moon. I got out though. Yeah, exactly. And that's my point, man. By all means, I'm like mad props to anybody that did well on Dogecoin or Safe Moon or AMC or GME or anything. I don't hate any of those, but let's be real. They're all trash. There's definitely money to be made on these things. I mean, I talk a ton of trash about Cardano, and I mean, I did very well on Cardano. I talk a lot of trash about it. I did very well on it. But it's trash. It's a trash project. A trash founder. It's not going to do the things it said it was going to do. It's been lying for years. So at some point in time, it's like, okay, maybe we were wrong about this thing. I mean, look at Cardano. It's been literally promising smart contracts for an entire, like 2 bull markets. They were talking about smart contracts back in 2018, 2017, 2019, whenever it was, like way back then. Okay. In the meantime, they still have failed to deliver smart contracts. It's still trash and doesn't live up to any of the things it says. And then in the meantime, think about how many other projects have come up that are already delivering smart contracts on like the Ethereum blockchain or whatever. So it's like, well, I mean, hey, Charles, what's taking you so long? I mean, why not just buy one of the things that's doing the thing that it's promising? If it can't get it right, it's probably never going to get it right. And in the meantime, those things are going to keep getting better and better. And now Cardano's trying to catch up. And now it's huge. It's got this big market cap, this big valuation, and it doesn't do any of the stuff. And then there's other things come along with smaller valuations that are already doing the thing, that are promising stuff and then delivering. Well, where do you think people are going to go? They eventually migrate to the thing that works, in my opinion. But yeah, I think we're going to go ahead and wrap it up there. I appreciate everybody tuning in today. Sorry I couldn't do any actual requests or whatever. I should have thought ahead of time and updated again. It's so annoying. Whatever the feud is going on between the browser and TradingView is getting a little bit out of hand because it's really, really annoying to have to like load back up like 50 charts. And I hate doing it right before a stream. So I didn't realize it wasn't letting me load up new charts here until like literally like an hour or so before the stream. So unfortunately, I will post those up for group members, but if you're not part of the group, you're gonna have to miss out on this one. But I will have it all straightened out hopefully by next stream on Friday. So make sure you tune in for the Friday morning stream, 11 a.m. Eastern Standard Time. And then obviously Wednesdays and Sundays from 8 p.m. till 10 p.m. Eastern Standard Time. It is Wednesday, 10 p.m. Eastern Standard Time on March 30th, 2022. Remember what I said about the conclusion of the month as well as the conclusion of the quarter about rebalancing, outflows from bonds, and all the other various macro effects taking place. Think to yourself for a minute, have things changed? Is the world going to be better? Are food shortages going to be a thing? Could that be an issue? Are prices on energy going to be a thing? Could that be an issue? Is strength in bonds or weakness in bonds or dollar or gold or any of these things going to be an issue? Is it more likely that we would be bullish going into a potential recession in the next 2 years or bearish? Is it more likely that, these things all of a sudden act as a store of value, or if they're just a speculative asset that's directly tied to each other, whether it's cryptos or stocks or the housing market or whatever? Pull out a piece of paper, write down a couple scenarios. If the housing market crashes, what's everything else going to look like? If the stock market crashes, what's everything else going to look like? If the stock market goes to new highs, what's everything else going to look like? If the Fed pulls back on their 25-point basis hike and goes back to zero or goes negative, what are asset prices going to look like? If people are starving and there's not enough food, if the war escalates, if, whatever the situation is, just do a little flow chart and think about it and think, okay, if this, then that, if this, then that, if this, then that. Bunch of little hypothetical scenarios, and then that way you've already thought through some stuff in advance, and then if one or two or all those things happen, you already have sort of like a base case scenario or like an outline of what the future looks like and where you want to be positioned for it. That way you're not all of a sudden after the move happens or while the move's happening or while there's a breakout or a fake out or a breakdown or a crash or a pump, or you're all of a sudden trying to figure out if this then that. Just do it ahead of time. Do a little active exercise, and then see if you're right. Write it down on a piece of paper. And then as things start to play out, you're like, oh man, I was right about this. Okay, what did I miss about this? Ah, I see. So commodities. Okay, so energy. Ah, that food thing, and just helps you to do those exercises. And then, obviously over time, long enough time frames, different like cycles, macros, etc. Like you're already prepared for it. You can remember what happened last time. Study the past, study the charts, look at the technicals, look at the fundamentals. How do they all line up? And in the end, you'll be better for it. And what is that? It's just putting in the work, educating yourself, spending your valuable time, money, whatever on, resources to make you a better trader, investor, human being. So that's it for tonight. Hopefully you guys enjoyed the stream. Appreciate each and every one of you turning in. But that is it for today. Crypto Trend Trader signing off.